Good morning. Welcome to Risk Neutral Trading, my virtual trading journal. It's August the 6th, 2025, 0800 on a Wednesday morning, and all times I refer to or that are visible on my screens are Central Standard Time. Again, this is my virtual trading journal. And the reason for that is, there we go, everybody's live there. Okay, great. The reason for that is I don't multitask well, and I believe journaling is important. So I use this method to capture everything I see on my screens with the video, and then my voice over here provides some insight as to what I was thinking, and I don't have to remove my focus from screens and trading to do screen snaps and type and those kinds of things. I stream it to YouTube because I am very, very aware of and want accountability and transparency, and I can review it on YouTube from any device, which is pretty handy. I have a commitment not to take any trade off of the stream. That's the reason I start now at 8 o'clock every morning with this explanation, and then the numbers coming up in the pre-market and my analysis of how the day will begin. And then it lasts until 1500, which is the cash close. That eliminates the possibility of me having a trade develop and then not being able to do it because of the stream being down or whatever. So that's that. The stream is not monetized in any way. So your likes, subscribe would be great. I'd appreciate that, and contribute to the chat. That's good too. It's a lonely business standing here. I stand in front of these screens, and these are standing desks from now until, I started in about an hour or two ago, until sometime around 1700 at night after the ETH and etc. So, it's nice to get some feedback and interaction. The screens that you see here are Bookmap and IRT. The next order of business coming up here is the reports and numbers. So we have the crude inventories at 9:30. We got the 10-year notes auction, which is a real big deal, at 12. And then daily, the FOMC fellow is, I wonder where he's from. I'll bet it's Texas. I'll bet he's from Dallas. Not sure though. Is 1510. This is financial juice. What you see has a similar docket here, but it also picks up all these random speakers and people talking about stuff, throughout the day, and they are undertaking to add random risk potential, which I consider anything to do with the administration, Trump, et cetera, to be a random risk, because typically that's not a derogatory statement or comment. It's just that we don't know about it. Good project management, good trade management is that you are aware of risks and you mitigate them, because risk management and risk control is the ultimate thing for trading. So these are random risks. Now I have a screen snap to back this up. This business was not in here an hour ago. So they're adding that stuff in, which is really nice. Now, both of these, financial juice, you'll see here, delayed, blah, 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 and the investing.com are both free. You can pay for them, some fancy thing if you want to, but they're both free now. And we are in earnings season, so here is the earnings for the day. Too big a list to post anywhere, but there you go. The little star means it's reported before the open. Therefore, you've got the numbers and the results. And the little quarter moon is after the close. I'm always tickled when we're out of earnings season. Okay. On to the pre-market. Well, here is, let's do this a different way. This is yesterday's RTH session. And here is last night's, and where we are so far overnight, or the ETH. You notice that we're putting in a barcode right up here, just about around the IB low, and this transition from the excess to the bulk of the distribution from yesterday. Typically in the old-fashioned market profile jargon and philosophy, a B-shaped profile like this, think about it pointed the other way, is indicative of long liquidation. And a P-shaped profile, which I think we have, like right here, is indicative of short covering. So they're short, they're long, they're short, they're long, you know what I mean? Looking at, zooming in now more to, the immediate time. There's our open last night, traded down just a little bit, took a little peek below, didn't find much interesting down there. And essentially our inventory, if you just kind of draw an imaginary line across here, our inventory overnight is 100% long, or 98% long. We had a little bit of volume down here, this little guy, and then all the balance of it is above the previous open. Here's the close. Here's the open. So we're about 100% short. Long, I'm sorry. Typically, that I would be expecting responsive selling to take some profit. And I think that's only makes sense. The way this market has been trading the last few days, I would not be surprised about responsive selling, but I would be more expectant, I believe, of an open auction, kind of trying to figure out which way to go here. You see that this is the market profile chart. You can see where we traded. There's that big down day, gap down. Here we go. Well, here's the gap. We closed the gap, and what are we doing? Well, we're just kind of trading over the top. There's a P-shaped profile, and then here's a B-shape, followed and not pursued. If you think about it in terms of value area would be down here, as you see over here. So value is overlapping the lower. However, it's higher than over here. So, mixed bag. Just around the charts quickly, this is the market profile. This is my Renko ES, mini ES, similar NASDAQ. And this is the micro composite chart for the ES mini. And all this is a RTH session chart with daily candlesticks. And those, wherever price overlaps, I draw and continue to draw a volume profile around them. Big gap down, no overlap, so no more profile. Overlap, new profile. That's how I do it, strictly. In so drawing these volume profiles, you automatically, by the nature of IRT, you generate a high and low volume node, if you want to turn those on, which I do, and they push directly to bookmap. And they're represented here by the red and green lines. They're just the high volume and the low volume nodes of the market profile, volume profile, a micro composite volume profile, sorry. Then you get a micro composite VPOC and all the rest of the stats. And this is the market profile chart, as I just indicated. And I do the same exact exercise for the micros. Here's naked volume points of control. This is available. I have on both of my charts. And then we'll take it back to Bookmap. So the way, also I should say that the in addition to the high and low volume nodes, the session prices push automatically to Bookmap. Bookmap, here we go. So this is the micro composite column where I enter these values manually. And this one here was traded over yesterday. So I'm going to, in accordance with my workflow, what I do is when they're no longer a hot number or a live number or statistic, I change the text to black, and then every weekend I try to take them off. These are the high and low volume nodes. This is the full session volume profile. Started plotting at 1700 last night. This is the RTH volume profile, which will reset this morning. It's supposed to be spot on 8:30, but Bookmap's been struggling with that lately. And this is an important column for me, as my notes column. And I typically do this workflow at night, and I got to thinking it might be better to show this. The first thing I do, these are yesterday's statistics and migrating volume points of control and yesterday's open type. So the first thing I do, and I usually used to do this at night, but I'm thinking it's probably better now on the stream, I clear all the notes. Okay. Then I change the open type to what is expected for today, which will be higher in range. And how do I determine that? It's really simple. There's only two criteria. If we open right here, right now, or in other words, today's open, RTH Open, as it compares to yesterday's or the previous RTH auction in the case of Monday and Friday, close and range. So what are we? We're higher than the close and we're within range. So we are higher in range. And I change that just like this. And I'll tell you why. I do that because when I look back at a snap or review the stream, I can see the title column here, and I already know a lot of information about where we were when the session opened. Okay. This is also the column where I input the statistics, which you just saw from yesterday, based on today's open type. So the open type dictates which statistics we use from that study associated with these session prices. And I flag the migrating volume points of control, etc. And another flag that I always put in there is right here. This is per IRT and this is per Bookmap. And I stick with IRT as a gold standard. I put in a naked volume point of control flag here for me to see. This marks the location of the point of control when we closed yesterday. Cash. So that's the POC. And let me get to those, I guess. The way to go here is that none of these levels are mysterious or magic or anything hard to understand or to figure out or to know. The POCs, full session and RTH, are simply mark the price at which the most contracts have traded so far in the session. Right here at 39.25 is where we have traded the most contracts since 1700 last night. The very split second that any one of these price levels is higher than 36.20, say 36.20 or whatever the number is right there, that's where the yellow line is going to go. That has then become the point of control, the volume point of control. These are different values than the old market profile stuff. They don't use volume, they use TPOs. So, okay, beware of that. Then the next order of business, so we have a VPOC for the full session and the RTH session. We have a VWAP for both, volume weighted average price. we have an IB high and low. Again, nothing mysterious. The name is kind of misleading, but it is from the market profile days, and it stands for initial balance. What these two levels actually represent are the high and low of the first 1 hour of the RTH trading session. Absolutely nothing more than that. Got nothing to do with volume, got nothing to do with anything. It's the high and low of the first 1 hour of the RTH session, period. So, knowing those things, and there's no other indicators you'll notice over here, and these stratations or whatever you call them, these different colored lines, represent, here's 151 contracts sitting at 63.60, and it draws this, tells you that came into the market. It's kind of handy. It tells you that it came into the market at 2:34 this morning, and it's been sitting there ever since. There you go. It's resting liquidity. All right, let's, seems like I'm forgetting something, but I don't know what, so that's, I'm going to keep going until I remember. Let's get back over here and let's talk about the statistics now. They are generated from this homework study in IRT. As I said a minute ago, there's only two criteria: where we will open today in the RTH session as it relates to the previous RTH session close and the previous RTH session range. Yesterday was lower in range. Our open was lower than the previous close, but within range. Today, I expect it will be, as we just discussed, higher in range, okay? Now, the study is real simple. Well, or let me continue. So there's higher out of range, higher in range, lower in range, lower out of range. This is gap down, gap up, and two in the middle, There you go. It's real basic and real simple. The study looks back at 2001 days. Of these 2001 days, we opened higher in range 604 of those days. Of these 604 days, we price revisited the overnight volume point of control 504 times for 83.4%. We jump back over here and we go, where is that? Well, we happen to know that the price is buried right under here, right? Because we can see its overnight volume point of control there, and they're stacked on top of each other. So we're going to go 83.4. And that, boys and girls, is as hard as it gets. Like I said, this is not in any way, shape, or form what we're talking about here. I'm not talking about calculating Black-Scholes or options markets or any of that stuff. This is basic stuff that anybody should not be afraid of and move forward with your trading, in my opinion. And then I simply go down the list. Overnight volume point of control. Overnight mid, 77.2% of the time. Overnight mid, again, it's hiding back here like a little scaredy cat back there. Now it's overnight mid has got to be right up here too. That's pretty amazing. They're all stacked together. It's right under here. There's the overnight mid. See that? EMID? It's living under the VWAP, so that's 77.2. Typically that, they're not jammed up so tight. That's that lets you know that it's been a fairly narrow range and we are fairly rotational. There's an upward skew to it, as I spoke about. Here's the open of the range of the session. And this is the entire overnight session right now that we're looking at. Next is the overnight high, 75%. Well, that one we can find pretty easy. And these are not hard, fast targets or absolutes. They are statistics, probabilities. You have to keep that ever present in the front of your mind, because that is how, which I'll talk about later, the previous value area high is 71.7%. Well, I'm not going to put another value under there at this moment. What else we got here? Previous close is 70.9. There's the previous close. Now, I'm kind of random with the way I do these, I suppose, and that's not helpful. But typically, you can see by the numbers how we typically move. The most common revisited price is the overnight volume point of control, followed in hot pursuit in the two interior, higher in range and lower in range, followed in hot pursuit by the overnight mid. Then typically it's the high and the low, and we'll get to the overnight low here in a minute, I'm pretty sure. 50%. Now, because we're higher in range, there's more of a skew to the upside, right? That makes sense, doesn't it? And then we get into the less frequently visited, or the lower statistics, lower probabilities. The previous, where'd the previous low go? Previous high is 56.3, and that's way up here. Right here, 56.3. And that's kind of how they go through the day. And they are just to suggest to you potential targets and what direction the market may be wanting to go. Price discovery, the auction, whatever you want to call it, however you want to look at it. IB high is 68. Okay, that's one. Well, there's the IB. The IB high is right up here under the high of yesterday, because we traded up to there on the open and never came back. So that's an important thing to remember. The IB low is 62.3%, and that's right here. And the way I do that is 63.2 IB low. And why do I type the initials? Remember the definition. This is the low of yesterday's first 1 hour, and this high, which is living up here that you can't see, IB high, is the high of yesterday's RTH first hour. What's going to happen when we open here at 8:30? These are going to both move to the high and low of the current RTH session, high and low. And that's that. So now I'm going to do something else I do every day. I don't know how much longer I'll continue this, but, anyway, I'm getting tired of that. And that is the TLab snap. And what is the TLab? Well, it is, and here's where you can tell I don't multitask well. The TLab is a bookmap Discord chat room. Started by a guy named Tom B. And the first take home is it is completely free. You don't even have to be a subscriber to Bookmap in order to participate and take full advantage. All of the, resources that are pinned and all those things are completely free. There's a description, or you do have to join the Bookmap Discord site, obviously, and that is, there's a link to that in the description here, as well as the disclaimer, which I think I forgot to say. This is not for financial or trade advice. Anyway, that's important. And once you join the Bookmap Discord, so navigate to this place right here. And that's the only room there that I recommend. And this is the snap that I post there every day at about 8:20. And this is just to give folks who don't have similar charting. I started this a couple years ago. People that don't have similar charting have access to all the numbers and kind of what was the lay of the land. That was my thinking. And to help eliminate a lot of questions which clogged the chart early on. What's POC? What's the value area? What's POC? And I thought, well, if everybody had a one-stop shop to get that data before the market opened, that would be a good thing. So that's what I've done. And like I said, not sure how much longer, but or that it's even important anymore, to be honest about it. Or maybe it never was important. I don't know. People used to comment that they liked it and thumbs up and stuff, but I think the tenor of that room has changed some. So, and that's how chat rooms go. You know, people come and go, and focus comes and goes. Anyway, so back to the business at hand, which is this stream. Oh, and finally, every day at 8:20, I post that snap, and every day at about somewhere around 6 o'clock, I post the numbers. So we know that we're not going to have any numbers coming out until 9. We know that right now we're about 100% or 98% long inventory overnight. We have barcoded from about roughly the London Open. And it would not be surprising at all to see us have some responsive selling to take profit. And then open auction would kind of be my guess. Yesterday, well, I'm just looking around the horn here. Yesterday was not an inside day. In reality, yesterday exceeded the previous day's high by about 2 ticks. So, you know, depends on splitting hairs, but technically it is not an inside day. And let's get over to and be ready for our open, which is going to happen in about 4 minutes. What have you got to do in order to trade? That's pretty important, isn't it? So with Bookmap, you need to activate the trade control panel and select which way you're going to interact with the application to trade with your mouse. Chart, you can only trade with your mouse in this active data column. Dome, you can only trade the dome columns, and both, you can only trade both. I have a further thing that I do, which is I trade with multi-brackets. And in this case, I use a risk-neutral trade. In all cases, I use a risk-neutral trade management system. This is the smallest risk-neutral trading package because you need to trade with a minimum of an even number of lots. So 2 is the lowest even number, isn't it? Then you determine a stop placement for the entire package, in this case, 2 contracts. You can determine this stop in ticks by however works for you, your account risk tolerance, ATR, harmonic rotations, volatility, whatever. I have chosen 12 ticks. The minute you've done this, you automatically have set, whether you know it or not, the first risk-neutral target. Because it is for half of the package, and it is for the same number of ticks positively as the stop is negative. Then the balance of the package is divided into the runners. If you're using a 4 lot, you know, there you go. If you're using the 2 lot, which I'm doing, there you are. I also use the multi-account trading thing, which copies trades. After I've done that, I confirm the right package size. I re-click the button, stays green, stays unlocked. I get my real estate back on the screen, and all of the same data is visible up here in ticks only, because I don't believe you should trade P&L, as is cancel and close. So there's no need for me with multi-brackets to have this open, because I don't use any of this gear down here, and all this data is the same. So there you are. And now we're ready for the open in a minute. And let's, you know, the good Lord's willing and the creek don't rise. Let's see if this son of a bitch resets like it's supposed to. I think that's pretty much got us up to speed now. I hope. What have I done here? Yeah, 2 lock factories, risk neutral, da-da-da-da-da. Okay. I'll put the snap out there, whether that's helpful or not to anyone. And that will be my interaction with the TLab anymore these days. I focus here on the stream because it is actually a suggestion from Tom B that we should all narrate and focus on our trading. And I took it to the level of, he he suggested and uses OBS as just pretty much everybody else, I guess, for copying stuff. And there we go. We're open, and this damn thing didn't reset. Now let's see how many minutes it takes to get its shit together. I'm looking down here. It's 30 minutes and 12 seconds. I mean, we're at 8:30 and 12 seconds, and the column is not reset. Really disappointing. Has worked good for years, and why it suddenly stopped, I couldn't tell you. But it's irritating because the POC is not plotting properly, and the volume profile will be off, and, you know, it's just not happening. I'm going to give it 1 minute as much as I can't stand it, and then I'm going to double click it to reset it that way. That's really irritating. And this thing, I've built the task into the task system. Crap. There we go. I built a task into the task system to resync. Get out of here, you son of a bitch. Data aggregation. There's not. You see this big bunch of red down here? That's the reason this thing is choking. It's trying to aggregate that data as much as they can, and why that's doing that, I don't know, but that's really irritating. Granted, the market is trading a lot of volume. Every day it increases, I think, nearly every day from where it was. But, you know, I'm not going to accept that. Now what I need to do is I need to click this and say, don't clear the resets, because it'll now have its own shit together and get this where it's supposed to be for the IB high and low. And that'll be pushed from Bookmap. We have no lags in Bookmap, in IRT. So there's no lags in calculating IRT at this moment. And Bookmap just can't seem to keep up. Frustrating. They're very definitely frustrating for me. Now I'm going to eliminate this one, because you see this was based on the delayed volume profile. I don't think we had a volume profile there. Let's check. Yeah, I guess we did. Yeah, we did have one little dipsy doodle here. Now we got a crazy Ivan going on up here. Why does that happen? It happens because all of our volume levels are so close together. You know, if this is at 1422, it only takes one of these levels to be 1423, and that's where that volume profile is going to go. And now it's up at 1600. That's how, again, it's only math, volume, numbers, you know. It's not pointy hats and magic wands. So there we go. What is going on else here? Let's go around the horn. Now the next thing I need to do is change to the daily sessions only. So here's yesterday's daily session, and here's today's. There's our open, not a gap because we're within range. We traded down just a little bit. There's a little bit of that responsive buying or selling, and now we're pushing over here. Oh, what am I doing? Getting all confused here. And you can see where we've opened as it relates to the past history, recent history. Same thing here. And I'll do the same for the micros. There's actually a reason for doing this, but may or may not be important to anybody but me, so. Okie dokie. There we go. Now we're getting some recalc lags on the buy switching to only 4 milliseconds and back to where it belongs. Okay. Here we go, boys and girls. Now, one of the things I've started doing, which I like, originally suggested by Rod, if I'm not mistaken, was to set this just a random vertical line exactly at each session open. And I keep the entire session visible on the screen through the day until I'm at a point where I want to perhaps interact with the market, and then I can zoom in. But it gives me a much clearer perspective about what we've been doing. Hey, Antonio. Good morning. All that drama was sorted out yesterday with just a simple phone call. I'm not sure if I mentioned that while you were still around the stream or not. I think I did. Account stuff with TopStep. And the reason I put the vertical line in there is I don't have to get down here and read the time bar, or the timeline. I can just glance left, and if I see that blue boy, I know I've got the whole range in view. Interesting thing, Antonio, when the guy reset those accounts, whatever he called it, reassociate or whatever it was, I now have 6 as opposed to 5. Apparently that account that I grabbed in the spur of the moment when I was panicking on the Sunday night about, TopStep changing everything around account-wise and the way you could trade. And I grabbed that Quant Tower account. That now is visible to Rhythmic. So I don't have it selected to trade because I did do some Googling, and it says you can copy trade as many accounts as you want to, but you can only have 5 XFAs. So I don't want to have anything jeopardize where I am now, if you know what I mean. But everything, real nice guy. And I did confirm with him, this is something that may be of interest to you. I unfortunately, it was a telephone call, right? So I don't have it in writing. Bummer. And I didn't think that, could you send me that in email? But anyway, if you have done the combine as I have or am with Rhythmic and other trading platforms, in this case Bookmap and IRT, and you pass that and move on, in other words, to a live account, you can trade the live account as with Bookmap and IRT and Rhythmic. They don't force you into the live account in TopStep X, because I told them straight up that I said, if that's the case, I'm quitting right now. I'm not interested in that. I would trade the XFAs, get as much money, paid out as I could, and then throw that into an account or something else. And he said, no. And he at first thought it was TopStep X, and then he did whatever he did in his back end, and he said, no, that's not right. Yes, you can continue to trade it with what you were using, which is common sense, but you never know these days, right? So there's that. And what else is hell going on? Random Risk is running amok. All these speakers are jumping to the microphones and stuff, trying to get interviews everywhere they can to audition for the dear leader for Fed jobs and whatever else, this Haskins or whatever his name is. No. Trump is not... He has no intention of having numbers that he likes be important, but he only is insisting on having reliable data. Well, so for the last 200 years, this was reliable data, and all of a sudden, because it's not the data he wanted, the guy's fired and it's fake news. It's the same old story, just, rinse and repeat. I wonder how stupid they think everybody is, but apparently it's working, so hey, good for them. Anyway, so, we have Random Risk continuing to evolve, and their financial juice, actually, is doing a pretty good job. What am I doing here? Financial Juice is doing a pretty good job adding these things in. You know, there was somebody, this guy, or whatever, Haskell says, there may be an announcement from Apple about a new factory or something like that, you know, and then, so not to be outdone, this showed up, and I have a screen snap that none of this random risk was actually in the. Here we go. We're likely to hear about a new factory from Apple at 7:10. Well, then that was out of the bag, so we got to hurry up and put this over here and make it a red deal. And it's like, yeah, man, this is crazy. I also heard, I don't know if you're, wow. Well, anyway, you know, if you were following the Fed meeting and the notes and whatever else, two of the Fed people had expressed a disagreement or, you know, that they thought that a rate cut this time was okay, would have been okay, as opposed to all of the other Fed governors. Now, obviously, they're pretty understandable where they're from. That's the first time that's ever happened since 1991. That was an interesting fact. So that everybody's just shaking for a job, right? And let's see now, what are we doing? Well, we've opened. That's pretty obvious. I'm still working on my IB trades, and we'll continue to do so. See if I can get this through. Yesterday was pretty disappointing because I was having the account goofy. I couldn't do anything, and there was two beautiful IB continuation trades. One about just after 9:30, and one later in the afternoon around 1, I think. Straight to T2 with zero heat. Not to say that'll happen today, and I'm real conscious of the fact that I want to be real matter of fact and focused on today, not, you know, letting that cloud my thinking. These crazy Ivans are pretty funny. We haven't been getting a lot of those lately. Light, and it's not light volume either. Yesterday was, again, it was over 100 and change, I think, in the teens % volume. Average volume for that time of the day. It looks low to me now, but that's, you know, what can I say? There were green across the board in terms of indices. Let's see what this thing's doing now. Yeah, again, 108% up to date. There you go. Open interest is remaining about half of what it was. SPX is moving along over here. And I still haven't figured out what to do with this harmonic rotation story. These delta divergences, I haven't touched these arrows of this setup. I downloaded this chart thinking it was interesting from IRT, and I was more concerned to look at the ATR. Pretty funny though, these things. If you tried to trade, if you took these as, obviously, like everything rearview mirror, if you took these signals, you're a goddamn wizard, right? If you took any of these, you got egg on your face. None of that. Should cloud your thinking. Where am I? Back over here? Okay. I was laughing this morning, Antonio. That starting soon thing or whatever, the thumbnail that's on the stream over here. I took a look up there. It's obviously a screen snap from my book map back in the days when I had all the colors and bubbles and all that crap. But ES was trading 4,200. Okay. Pretty tight range. Where are we now? Well, 12 handles wide. Right up to the EVPOC, but didn't take it. That's pretty funny. One tick. I don't know that crude is going to do much to us today, but well, there we go. There's the overnight VPOC statistic. Why this is doing this, I don't know. I don't know that crude will do much to us at the top of the hour, but the 10-year note auction at 12, likely be in market or at auction mover. Had a couple of shots at that responsive selling. Take a little of that profit back and balance the inventory from overnight, and now looks like they're going to try to push up. Doesn't look like that's what they're doing. I am continuing to focus on the IB trades. So there's that. And this is very definitely retail soup going on here. That would have irritated me. Once again, we're trading hell out of them in a tight range. Look at there. 1 or 200 contracts between these levels. And exactly why we're having this VPOC go all over the place. Try to kind of catch up here. Unfortunately, they're right under all of the other levels. I'm not gonna attempt all these crazy Ivans over here. Here we go, pushing that IB high. Up, up, up. That is so wrong. I don't know what's wrong with that value area high value. That is very definitely not the value area high from yesterday, according to my charting, according to IRT. But this level is being pushed from IRT, so I'm pretty confused, frankly. I've noticed some goofy anomalies, like what am I looking at here? With IRT, I've got to figure out how to reset it or something. You see how it's calculating this Globex VWAP for some reason over here, starting. That's completely not right. And how I've been able to reset that lately is to just, and it looks like it's correct here too. I don't know what this is for. Also, the value area high over here jumps around a lot. Now it's correct. A minute ago, it was up here from something. I don't know what. Hate that. That's like flying along and your temperature gauge on one engine goes up to critical, and then 10 minutes later, it's back down to normal. It's like, wait a minute. Yeah, they're making a big batch of retail soup for sure. I'm sure that you are patient. Our friend GA, he really trades the hell out of this stuff. It's funny, isn't it, how different everybody's mentality or personality or temperament or whatever you want to call it is. That's what makes the world go round. And the best part is everybody thinks that they are right. And everybody in the band's out of step with them. Yeah, maybe not. But funny to think about anyway. Well, we're almost 20 handles wide on the IB, so that's indicative of the volume, I guess. Not even at the half, not even at the IB 30 yet. What's happening in Staticville over here? And I mean, this is not obviously I'm working on the IB, so I've got nothing to do for another 30 minutes. or even think about doing for 30 minutes. Even if I were not, this would not be my environment. But, you know, if you're good at trading these kinds of rotation, mean reversion-y stuff, you could eke out some pretty decent profits here. But I wonder how that pays out, how that works out long term, because every moment that you are doing these things, this is my thinking, every moment that you're doing these things, you're exposing your risk to the market, right? You're putting on risk. And for what reward? Now, this is 10 handles. That's a pretty good reward. Isn't it? You know, two more handles. Well, this run across here was to both of my profit targets. It's just got so many things contrary to the way I think it ought to go, that it's not. It would be tough for me to do. And I admire people that can. And quit already with the calculations crap. So there's that. And as I think I was mentioning earlier, I'm after this drama with the accounts and the fact that I'm within one trade effectively of being into the XFAs on those 5 accounts. I'm extremely aware of not wanting to be a gunslinger, you know. That's for damn sure. Another one. Who said what? Unfortunately, that's my first go-to thought. Who said what? Right there. Yep. Let's see if I can figure out who said what. What the hell is this? Let's me see. Oh, yeah. Oh, well. There we go. Well, he wants to. I don't know. I guess now we're gonna declare war on Russia. Jesus, Christopher Christ. Wow. Yeah. I think I'll go back to bed. It's depressing. I wish I could get paid for sleeping and eating, man. I'd be a gazillionaire. I guess at one point in time there were sleep studies, you know, they'd give you $50 or something to go sleep in a lab all wired up. I remember the days in the hippie days back in the 60s, early 60s, when they were, you know, hippies and people that were going around trying to panhandle and, you know, be out of the system or whatever else would sell blood. It'd go to the Red Cross. In those days, the Red Cross would pay, I think, $50 or something, give you some sort of fruit. I never did it, but pay you something, give you some sort of fruit juice to, you know, build back your electrolytes back up after they took your blood and pay you $50 or $75 or something. And you'd see them in cities. You'd see people lined up out front. Now it's crackheads and shit to do that. I don't know that they still pay for blood actually, but that used to be the case around here back then. Pretty weird, huh? I guess not a lot weirder than, you know, working girls or something, but. Oh boy, here goes that ETH high. Here comes 75%, huh? Whoop. We just plowed into that 200 contract living up here and went through this one, which was $1.90, I think, if I remember early on. Oh no, this was not what I was looking at earlier today. That was this one. Mm-hmm. I have no idea about this expected move thing here, but it's interesting how it kind of. I don't think I'm not convinced I'm doing it right, you know, so I don't make a big deal about it, but I'm interested in looking at it. And because it is so important to people that I think are a lot smarter than me about trading and the options world with, you know, guys like Sosnoff and those people, that's all they talk about is implied volatility and the expected move and what. And it is a thing from the options world based on the insight at the money straddle. In this market, funny, you know, day before yesterday, short covering, hey baby, oh my God, everybody's going to get out of their shorts. And yesterday, oh my God, all the longs are liquidating. And now today, what the hell are we going to do? I don't know. You know, it's like you said, nice roller coaster. No, what they're doing is trading them. That's what they're doing. That's exactly what they're doing. They're making money trading them. And I'm not, but on the other hand, my plan has been in place since before the market opened. So that's my story, and I'm sticking to it. Well, 15 handles. Boom. Okay, so here we go. Around the horn here, let's look at what's happening. Traded out of their overnight longs here, and now we're building back up again. So, responsive selling was pretty much the open move, apparently. And here we are now. And I say that because this is RTH only, but there's the overnight high. Okay, so, and the overnight low. We did take out past mid. So I'm saying that that's responsive selling for profit taking, because the overnight inventory was way long, at least 90%, I'd say. Just a wag, but anyway. So what I'm doing over here, let's see. That's the full session. Interesting how you can't really see that. And this is the RTH session only. Well, Uncle Rod got his IB30, huh? Absolutely. There we have the high of the first 30 minutes. And there we have the high of the second 30 minutes. There you go. That's an interesting statistic to start watching, I think, because I recognized this yesterday. It's bracketed by time, The IB statistic, the old-fashioned one that I'm been trading off of, is got an open end to the end of the session. Whereas the IB30 is bracketed, you've got a percentage of probability that happens within 30 minutes. I haven't looked at it enough to figure out how I'd approach that. Obviously, going long at the high of the first 30 minutes is not the way to do it. But there's, I'm sure there is a big volume spike here, huh? What was that for? What was that for? Let's see something there. This is just a straight up 1 minute chart of the ES. Where's the damn volume stuff go? Did I? Yeah, here we go. Funny how our book map shows that big spike at whatever time that was. What time was that? At 9:14. And here we are. If you want to believe this thing, that's not certainly not outlier volume wise as it would indicate on bookmap compared to the rest of them. Huh. I have, and I'm not saying I have any freaking idea what that means, but interesting. Yeah, I got no idea. As to be expected, here's the, what is this? This is the full session. This is not just the RTH. I wonder if that changes it. What am I doing now? Who's on third here? Let's see if just today's session changes it. Now it's even worse. The volume for that 14 minutes is even a lot worse for just the day session. That's pretty weird. Or, yeah, I guess that's a good way to put it. I don't know. That's pretty strange. What's happening to my heat map here, my IRT heat map? Nothing, like usual. Pretty weird. I don't quite understand that. And that's something I think I would want to understand. Why there was this exceptionally high volume way above all of the session of the RTH session so far, except here. And yet it's not at all noticeable or reflected in a 1 minute chart with volume. And I suppose I'm missing all my flags over here because I'm busy looking around. Closing in on the IB statistic here at 20 after. And boy, we're just rotating the heck out of things here. Psychologically, I find the IB failure trade to be, and I realize mean reversion is a much more frequent daily trading environment. I find it harder to identify and take for some reason, or more challenging. Here we are today. Yesterday, day before, Friday. Okay. So, in the words of the famous TLabbers, well, 51's too high. Here we go down to settlement and close. Huh? Previous close. Not surprising at all that we'd revisit settlement in this environment, but I forgot to give you a heads up, Antonio. I went out to get some water and, came back and we dumped 10 handles, 12 handles, that would have been. So that dump right there, bingity boom, was my full risk neutral package with both targets. I'm not saying that I took that or anything else, but it's important for me to keep those things in mind. Now, none of this would qualify for me because of the range requirement, the confusion, and we have not gotten to the IB statistic. What have we got below us? Previous RTH low. I didn't ever put that stat in. Bad boy. Previous RTH low. $35.3%. This is a good example or illustration here for the stream. I believe it's just the two of us, though. So, you know, quite obviously, we're going to get through 35% in order to get to 50. You know, that's why it's a good. I like it when those happen, because that's a good example or illustration for the stream. Is that these are just probabilities. These are not hard and fast targets or lines or, you know, values. Okay, 3 minutes until the IB sets. This is very definitely a rotational day. Where's my mouse going around here? Crazy. Doing the crazy thing. Make sure I've got everything set up right. We're on the RTH session across the board. Yippity dippity doo. Everything's chopperama over here. We're getting the old consolidation, you know. See how we're winding them up, baby. We're getting higher lows and lower highs daily. IB low settlement and the previous close in a stack. Looks like dangerous territory to me. Now, because of this that doesn't quite do what I want it to do here. I'm never sure which way to wind this damn thing. What, Banda? Oh, you gonna sing for Antonio? Yeah. Some snacks. Huh? You want a snack? Oh, okay. And there is our IB statistic, which, as we both know, says that in greater than 97% in all four open types, the high or low of the first 1 hour, in other words, the IB high or low, has a greater than 97.7% probability of being exceeded by price in the balance of the RTH session. Can be 1 millisecond from now, can be 1 millisecond before the close. The statistic is active as of now, 9:30. All we have to do is drop down here and exceed that, and that's over with. One thing that I have learned very definitely is not to trade to the statistic. You know, oh boy, we're below the VWAPs and the mids and the POCs, and we're going to take the IB low for sure. Maybe we will, but I've gotten burned on trying that idea several times. So what I've done in the past month or so here is to only trade the IB statistic, and there are two of those trades. One is the IB failure, which is a mean reversion trade, and it is suggested by a rotational day. And the second is an IB continuation, which is pretty obvious. Takes out the IB, whichever side, and continues on. And that's more suggested in a directional day. The last couple of days, we've kind of had the tanker turn around shortly after the IB statistic was set, in play. In other words, 930. And the last couple of days, that IB continuation has been clear and clean. No heat and straight on to both targets. Not saying that's going to be anything to do with today, but the object is to trade what you see, and that's what I'm trying to do. Yesterday, I wasn't able to trade because of the account story, but with TopStep. But the idea is, I did definitely anticipate the trade, narrated the trade, hypothetically, right? Not rearview mirror. As it played out live in real time, which is what I'm trying to do here. Nothing to do here, folks. Move along. Nothing to see. Poor little panda. Mom bought some diet food, and she is pissed. She's walking around. She can't even sing for you today, Antonio. She says, I can't sing on an empty stomach, and this food sucks. She will, of course, give in and eat it, but gotta lose weight. She's a little tubby two shoes. The reason I have tried to vet these IB trades first is because they're obvious as nose on your face. Hey, Richard. Morning. We're just getting ready we've just put in we haven't taken the IB statistic yet, but we've just crossed over 930 Central, so it's now active. Been a pretty rotational, pretty wide range. The IB is 26, 36, 46, 15, 25 handles. Yeah. Overnight was pretty much long inventory. And not a wide range, but long inventory. And we've getting a little responsive selling here, apparently, some profit taking. And so anyway, back to the IB. Because you get a trade opportunity in both types of environment, a rotational type, which would be the IBF, IB failure, which is nothing more than a mean reversion, just called something different. And IB continuation, which would be suggested by the directional type of day, as opposed to one of the other setups where they don't do that. If you're looking at mean reversion trades only and trying to vet those, well, that's all you're going to get. It's mean reversion. You just got to stand down and not do anything in a directional day. There's nothing wrong with that, but that was a consideration. I suppose the first consideration was obvious as the nose on your face. How can you miss the IB high or low? And how can you miss 930? I'm going to really give a lot of thought to that IB30, however, because I like the idea that that's got time parameter on both sides of it, as opposed to this general IB statistic. You guys get ready to trade now. I'm going to step away for a minute. I got a bio break. And that's exactly why I don't recommend trading to the statistic. Way more than once we'll do this and trade right back across and take the statistic on the other side. Granted, it's, remember that the outcome of the very next trade is 50-50. This is a binary market. It can only go up or down. There is no horizontal movement in the market. We put the time thing on it. So, not surprising, but definitely a lesson learned there on my part. I remember once in the TLab, I don't know, a year and a half or something ago, this same situation set up, and I said, now watch us go up and take out the other side, or, just some offhand comment. And that's exactly what we did. And 2 or 3 people were just flabbergasted as to how I knew that in advance. I said, I had no clue. It's only, it's flipping a coin. It was pretty funny. They thought I was some kind of, Harry Potter or something over here. What was the guy's name? Voldemort. That's it. That was funny. And here we go across the range, eh? If you're mean reverting these or you're trading the range, that's been a great day for you. I hope somebody has. That's not my deal, but certainly, of course, in hindsight, rearview mirror trading is phenomenal. You knew exactly to go long here and go short here and go long here and go, what are you going to do up here? Cover, I guess. Okay, this is not very much fun. Trading is not fun, in my opinion. If I'm feeling anxiety or adrenaline or some of those things, I'm not trading right. I think trading should be boring and premeditated. I don't know, for lack of a better word. Adrenaline junkie, I am not. And I suppose that's a function of time. So a quick trip around the horn, what have we got? Well, we're getting higher lows and lower highs. We're focusing in, consolidating into a smaller time frame. Yesterday was not actually an inside day. Yesterday actually exceeded Monday's high by 2 ticks or something stupid. But, otherwise, yeah. Inside day looking like another one. Higher lows and lower highs. Consolidation, focus, building energy to do something, and I'm not sure what, obviously. Here we go on the market profile, similar idea. And today's RTH and today's RTH. Yesterday's RTH. Today's RTH. NASDAQ isn't doing a hell of a lot more, actually. Pretty quiet. Volume is probably still elevated. Let's look. About 125% of average volume for this period of time. And here we are. There's the session start. Miraculous, if you're a range trader and you're catching these, this is fairly clear and clean, I would say. Up here to a new high. Test back up and don't get above it, and pick an entry in here someplace. That would be what have you got here? You got lower lows, lower highs. I guess those would be all indicators of that. I'm working the IB high, IB statistics. We have set the IB at 930. It's now active. And we have not taken out either, high or low. Much to the chagrin of a bunch of people that were trying to trade to the low here, I suppose, and are likely now stopped out. Crazy Ivan on the way up. Right over here, it was looked pretty likely we'd take the IB low. And it's looking pretty likely that we'll take the IB high. This 104 contracts or buck 83 has been sleeping up here since 920. There we go. Here we're gonna take it now. You watch and see. Yep, there we go. So the IB statistic has just now been taken. Now what's going to happen? The day suggests an IB failure because it's rotational. The last 2 or 3 days we've been in essentially this position, and then the steamer, the tanker has kind of turned, the context has changed, and we've kind of gone directional. If you look over here, day before yesterday, and here we are today. So I'm hesitant. First of all, there has not been an IB continuation. Well, I suppose if you're real, no, there has not been. In my opinion, there hasn't been a trigger and, validation and trigger. And I need to think about what will be my thoughts right here. Well, looks like we're going to go directional again, maybe. We are getting a lot of excess here, which is a bad thing. That's, in terms of a directional day. And there's the overnight high just above us. So we've only got 7 handles to the overnight high. We've got 260 contracts of liquidity laying up here at the 60 handle. I would be pretty apprehensive here to take a long, even though it sets up with an IB continuation long, because of meat on the bone, range requirement. There's 51. There is the current high. That is just the scale. And then what have you got? Then you've only got another 4. So you're in 7. For my risk neutral 2-lot package to pay out, both targets I need 12 ticks. 12 handles, I'm sorry. And I'm not convinced that we won't mean revert. No news or numbers until 12 when we have a bond auction, or note auction. There's always the ever-present danger of random risk. I'm not sure if they've successfully gotten the attention off the Epstein story or not. It would be pretty phenomenal if they did, but with the attention span and the news cycle being so short, it's not out of the realm of possibility. And they keep drumming up bigger things, you know, nuclear submarines towards Russia and, you know, a lot of misdirection, I think. For my IB plan as I have it today, as I have it so far, these do not qualify. They need to test through the IB and come back for the IB continuation. Actually, for the IB failure as well. This is an iceberg, buying iceberg. I'm sorry, selling the football. And these little dots here are, or bubbles or whatever you want to call them, are volume bubbles, and they are. Like here was a 111 stops out right there. And they're based on delta, colored by delta, sized by volume and colored by delta. Crude inventories. Way down 3 million barrels. Really? Wow. That's pretty interesting. Their previous crude inventory was 7.69 million, and we're down -3. This guy is special. Yeah. So here we are. We're hovering about we have taken out the IB statistic, and we have yet to qualify for either of the IB trades, in my opinion, in my workflow of an IB failure or an IB continuation. Now, if you got all excited and tried to take the IB continuation and got in right about here at 51, you're sweating bullets because, well, are you? Let's see here. 51.5 if you're really good. Would that have gotten you out? Oh, yeah. Okay. You would have been scaled now, right up here. Assuming you were filled up here, you'd be scaled 3 points based on my 3-point bracket. And once that happens, well, okay, who cares? Put your helmet on and your feet up and watch her play out. This environment is, I think, suggestive of mean reversion, but That's just me. We hit into that selling iceberg up there twice and didn't get any place yet. The thing that worries me just a bit is the only level we've got above us is the overnight high. 7 handles above, which is not within my profit profile on this 2-lot risk neutral setup. Either way, actually, more potential to the downside. You know, the mean. If you're looking at a mean reversion, where are you? Oh, there's 39 from 51, so just barely the profit targets. A lot of buying here, not getting any place. Not a good sign. What do we have essentially happening? Lower lows and lower highs down to this IB. And I'm not saying anything definitively, but just observing, right? Now you're sort of disappointed that you got long. What have we got here? We've got one big balanced profile, skewed to the upside, yes, but that's what we've got so far. So I'm going to be Mr. Cautious here and see how this develops. Being extra aware of the fact that I am nearing the milestone for the 5 accounts, and I don't want to. In the last 2 days, I was not able to trade, quite frustratingly, as with some really nice, clean, clear, no heat IB continuations. 2 of them yesterday, 1 of them the day before. Narrated in advance, not rear view mirror. Go back and check the stream out. And you know what I didn't put in there? I just realized that. I've made a chapter title for missed vetted trade, and I didn't put that in there. I'm going to have to go edit that. I can't edit the streams, but I edit the chapters, which I add to the stream every evening. Here's our session open. Here we are. This value area high flag is just something's wrong at IRT as far as I'm concerned. It's getting confused with yesterday, I guess, or day before. Not sure why. I say that because here is today's value area high. Here's yesterday's value area high. Yet, here we're flagging it over here. I've noticed it jump back and forth, and I've not been able to figure out why. If you just look closely, you'll see that this is 2 days ago value area high, and that seems to be what it's looking at. And I have no explanation for that, other than bummer. Other than it's a drag. I hate it when crap doesn't work, you know? You need to be able to depend on your data and your charting, and that's real important in my book. If it were not for the lack of distance to the only upside target, which is the overnight high, the fact that we have not been able to push through 55s, this is essentially a reasonably valid setup and trigger for the IB continuation. However, it's invalidated by our balanced profile. So I stand by. We'll have a race here, Antonio. See whether you get to Tom time or I get to nap time before this market is dozing me to sleep over here. Really not sure now. And now you see that the value area high indicator has moved, suggesting that the value area high flag is going to follow suit pretty quick. Like that right there. And that's correct. That would be the correct area. 38, 39. Yeah. I'd say so. Pretty close. Is that right? That's previous. Yeah, so that's down there at about, yeah, that's just about right. That's where it should be. This is the previous RTH, and there's the previous value area high. So what all this random knit-nat shit going back and forth up and down here is, but I've noticed that for a few days or sessions or whatever. Only the value area high. Must be some sort of a, I don't know what, with IRT. It's also been doing this thing here with the Globex VWAP too, which is frustrating. This piece of crap right here. Watch this. Oh, yeah, okay. You see how it's not moving and computing properly? Turn that off, apply it. Oop, goes away. Okay, everybody's happy. Now let's put it back on and see what happens. And that's also kind of goofy, but at least it's this is Globex, right? So this is more or less reasonable, and it's plotting properly across today's chart. I, like I said, lots of moving parts here. Lots of moving parts. This thing does some pretty amazing stuff in the background, and with all the different charting, that pretty crazy. That kind of thing irritates me. But now here we are again with the value area high up here again. That's completely goofy and not correct. And I am not sure why. what is it? 5375, 5300? Guess I better tell the boys over in whatchamacallit there. 39, 39.5. What happened? What happened? What did we do? Okay, well, let's pan it out. Here we go. What am I on? Yeah, there we go. So the IB continuation is okay. Was a nail biter right here. Depending on how quick you were and how good you were with your entry, you likely are stopped. But have only achieved so far a scale. I don't know. Who knows where we're going to go above that? But it's a little too much risk for me and uncertainty. Not that any trade is certain, but that's not a clear signal to me, in my opinion. This would not have been really. If you're really good with the rearview mirror and you want to just happily straight up BS people, this was your trigger, right? Never mind all the different times it did the exact same thing. That's what always tickles me about that. But so you didn't have any heat, but that's not real. That would not be correct for me. Well, there goes our overnight high statistic of 75%. So there you go. Now you've gotten 7 handles in the bag, and you're risk neutral. There's no, I may be lying. Oh, look at here. There's the previous RTH high up above us. Well, isn't that cute? And a naked volume point of control. See what happens when you don't scroll out and look at the bigger picture? They are so bad. Now we're 2.25, 2.5 handles high on these prices, so beware of that. The scale's going to be all goofy. For me, anyway, the perspective is going to be all off. These old gap highs up here and the old all-time high from put in an RTH session, 18th of July. Got no idea what'll happen here, obviously. And it's uncertain enough to me that I'm not going to put anything at risk. A and B, there is no IB setup happening now. The setup was, if you wanted to go with this, the IB continuation, which is paying off. We get up there to 65. Yeah, 65, that will be both targets. That would be both targets. So and of course, regret is the first precursor to FOMO and all those monkey mind things that you need to be aware of. I need to be aware of. Remember, this is me talking to me here. I'm disappointed with that, though, because I'm at a kind of a crossroads where do I just take every setup that presents itself? I'm still in a gray area where there's discretion at the actual execution point. And if I ate my own dog food, I would say no. Absolutely. If it's a trigger, take it. I'm looking over here at Rod's thing, and Rod just happened to post, the day you decide to focus 100% on quality setups rather than trade every rotation will be the day you flip the switch. And he has very definitely and successfully done that, flipped that switch. Got a lot of good common sense, Garrett, as well. Not sure how that applies to what I was just talking about. And boy, in hindsight, eh? Sweet. And here's our previous high. We've got a naked volume point of control up here, 74. So could well just keep climbing. You need to get it up to 65 and both targets would be hit, but once you're risk neutral, it's la-di-da, right? A walk in the park. I'm not exactly sure how to process this data here that we've been getting lately. We're in a rotational environment. Balanced market suggests a IB failure. 3 out of the last 3 days, you know, every day this week has been contrary to that. We've started out in rotation, been in that same environment and gone IB continuation successful for it, which is a directional day. Got to figure out just how to monitor that and recognize when the tanker has turned, or, you know, which is a euphemism for context changed. Still haven't made the second target. Likely will with the previous high above us. But not necessarily, you know, it's not written in stone. We also have that naked volume point of control up there too. So I am, yes, regretful that I didn't eat my own dog food and take these trades. And then, of course, as with everything in trading, you can argue both sides of every argument. Here's a bar trade, so this is a breakout and retest if you want to look at it that way. Here we have lower lows and lower highs. I mean, yeah, you can justify, or I should say rationalize anything you want to do, pretty much. That's why I'm trying to just stick to some specific data points. Now we're getting there. We popped that 65. We've got 200 and a quarter living. Oh, look at here, 483 at where we are now, 64s. We popped that 65. That will be that would have been the 2 profit targets. Disappointing. Perhaps a bit too cautious. Keeping a rein on my wanting to trade after having not been able to the last 2 days. That very definitely worked out the right way. Of course, this trade worked out the right way, but I didn't call it properly or execute on it. And in the rearview mirror, it's just, you know, right here was where you got long. you know. That's so easy, isn't it? Trying to just really analyze this IB here. What would I be thinking? Well, I can tell you what I was thinking, just listen to the stream, but what could I have seen that would have made me think otherwise? Probably just less fear, I guess. Less wanting to be right, or, this thing lurking in my head about these, this trade would have put all 5 of those accounts into the XFA. XFAs, plural. And I'm sure that that's lurking around in the back of my head, providing an extra layer of, I don't know what, fear, I guess. Girl, wuss behavior, I don't know. Clean and clear, once again, no heat, no heat if you took it here. If you took it over here, you're sweating bullets. Depending on where you got in it, it could be a stop out right here also. That's 49s, right? So if you got in it up here at 52s because of bad entry location, thinking this was the takeoff, you're stopped. Pretty disappointing. And I don't know any way to know that. Judge that, recognize that, however you want to say it. I don't know any way to say, I thought this was the takeoff point, not this one, or this one, or, This is 51s, and this is 48s, right? Yeah, 40.75. Wow. You were within 3 ticks of a stop. That would be a butt clincher. But here we go. Previous RTH high. Magnificent. So there is very, very definitely the full Monty as far as profit targets without any looking back. Now we've got this previous RTH high and that naked volume point of control up there, so we're likely up. Likely heading for higher ground here. Bond auction or note auction at noon. I don't think the random risk squad is going to be on the microphones. Well, I don't know. They're probably all over them right now, and I'm just talking out my ass. Oh, yeah, Rubio. Rubio, Trump, Haskins. Yeah. Pretty disappointed about the performance today. To say the least. And this is just one step in the journey, right? I mean, the thing that is also lurking around the back of my head, I was at a similar point, exactly, only with the one account, into February when my other world went upside down unexpectedly and in one morning. And I didn't react. I mean, I thought I was handling it pretty well, but I didn't deal with it well as far as trading goes. And I took it back. So this thing traded back down, almost back down from within 200, one trade easily of the target back down to within, I don't know where it went back down to, but it did. And now it's back up there again. Now I've been able to settle down and bring it back up. So there's all those things that lurk in the back of your mind, right? Those are all that's all the emotional baggage that you drag around with you. This, and looking back in the rearview mirror at these things, then you go, you dumbass. That's when you tell yourself, you take the triggers no matter what. When this is happening real time, that's when the discretion is in and the fear's whispering in your ear, and and that's a function of account size and milestones and things. If you're trading a large account and your risk neutral setup is a reasonable and very small percentage of that account, and you're just ticking it over day after day like a casino, winning it a hand at a time, that's quite a lot different pressure and place to be, right? And I'm aware of that, but being aware of it isn't helping much. I should say. Tonio, it's unless you've already left, it's Tom time, I think, isn't it? Yeah, 10:30. That's when it starts, isn't it? Yeah. Anyway. I hope you're busy making money hand over fist in the trade here and lost all track of time. That's what I hope for you. For your sake. This freaking value area high thing is doing this trick again. I really don't understand what the deal is. It's got to be a calculation. It's got to be something to do with the date for that particular level, because if I'm not wrong, it's jumping back and forth between the correct level which is 39.50. Here you go. Correct level, which is 39.50. And this bullshit, which is 53.25. And that's exactly what it's doing. Now we're up here at 53.25. And then we're going to jump back down here where it belongs. I don't know why. It is what it is. I guess it might have something to do with however this Globex VWAP is being calculated. Maybe. Oh, looky there. Now we're pulling way back and we didn't get up there. Obviously, for my risk neutral bracket setup, it would have been both targets and open the champagne. But if you're Rod, because I can guarantee you he'd have his target is right above that high and just below that naked volume point of control, or perhaps even above that one. And, you know, we now have lots of time left in the day, but I can guarantee you that's where he'd be sitting. I don't get this. And you see that now the line flag is down here, so in hot pursuit will come the actual flag based on that difference in updates. I don't know. This weekend I may do a cutover on my levels. I've always used Bookmap for all of our Dropbox for all this. Now the damn thing's down where it belongs, you know? I've always used Dropbox for my backup, my cloud backup stuff for years. Years. And years and years. And Rod or somebody was mentioning that it's not nearly as efficient or quick, whatever, as OneDrive. I don't know that, but I'm going to look into it. I had once thought about moving the stuff to OneDrive, the levels and things, but I don't know. I'm not all warm and fuzzy about that, actually. Well, I'm pretty just about pissed. Is it too early to start drinking? Let me just check. It's got to be 5:30 someplace, right? I bet it's 5:30 over there, and yeah, definitely. Let's go. Let's go. Let's show. Let's rodeo. Pretty close to 5:30. It's 16:41 in London. Middle of the night in KL. Well, by golly, girls, I better go see if my makeup's straight here. That's the sexist thing to say. Pretty darn disappointed in myself. However, I have followed my plan 90% to the T. So I guess there's that. But pretty disappointing that I've got to really give some long, hard thought when I review the stream about listen to what I was thinking and what I was saying, right? Reminds me of the old saying on the floor that confirmation's for Catholics, not traitors. In other words, if that's your trigger, and FT Moran Asker FT71 is always talking about confirmation risk or knowledge, or information risk. If you increase your confirmation risk, for example, by waiting for it to take out off a hair, break out of these highs. That would be your confirmation risk. Information risk is you're taking these asymmetric trade locations down here, but you don't have any confirmation what it's really going to do. You don't have that information. That's a good way of looking at it. Not, I don't think that helps me much in not taking the trade, but you know what I mean. So they shook out a few, reloaded, took out some stops, reloaded, and trading higher, eh? Gosh, that's disappointing. And now the naked volume point of control. And, not to point out the obvious, but that's nearly 10 handles higher than my T2 would have been on the IB continuation trade. I'm not altering those targets at all. I'm leaving them as the bracket, because if you're vetting a setup, you must keep everything constant, right? Otherwise they don't belong in the same statistical data set. They're not statistically significant with each other. If I have a handful of trades that have a T2 of 60 instead of 48, well, they don't belong in the same data set as those who have a T2 of 48 ticks. So I'm not changing them at all. After it's vetted and I'm comfortable with everything that I've been doing and my edge is proven, then I can use trade management to increase those things. For example, when here would be T2, right? Well, as we're approaching T2, I move my T2 to previous high, or the naked volume point of control, obvious levels and potential targets, and then manage the trade by trailing up. And this is a perfect example of how that can bite you. Here we approach 65, so you move it up, and you start to trail up behind it to lock that in. Pulls down and takes you out, and goes right to your target. It's ironic that there's the perfect example of how you can be bitten by that type of trade management. I'm not saying I know the answer to it. I'm just pointing it out. Yep. And not to point out the obvious, but yesterday we put in the IB low high and then never came back on actually the first 1 minute of trade. Today we did wait a little bit to put in the IB low, and then we're not looking back the other way. So, you know, one day up, one day down. Take them out. Get everybody on the back foot and take the money, and then turn around and go the other way. That's how the markets work, right? The market goes up to go down and goes down to go up. And I've talked about that a lot, so I'm sure that that's understood and common knowledge, but it does that because of the fact that futures is a zero-sum game. It is a complete fallacy of understanding to think that there's more sellers than buyers or buyers than sellers in a futures market. Every contract is just that. It is a contract between a buyer and a seller. It's not like the stock market where there's a pool of stock that you can buy, trade. You got to borrow shares from somebody to short. There's a pool of stocks you can trade. So when somebody says to you that, well, the market went down because there was more buyers than sellers, I just immediately shut off everything they're talking about, because it seems they don't understand the market. In order for the market to go down, sellers are aggressively crossing the bid-ask, crossing the spread, and hitting the bid. And that takes the market down. The other way around, buyers are crossing the bid and hitting the ask, and that takes the market up. But at no point ever is there more sellers than buyers. There can be more liquidity resting here. Of course. There's 367 at the century, or at the 80 figure, right? Will we get up there? Likely. But that doesn't mean in every transaction, there's no such thing as more of one than the other in futures. So what happens then? Well, why does the market go up to go down and go down to go up? Today, what have we been doing? We've been going up. What does that mean? Well, that means that buying, and more buying. Okay. Buying from who? Where did that inventory come from? And how would that other side of all that buying make money? The market goes up to go down, and vice versa. And that's how it works. That is how the futures market works. I'm 100% convinced of it. I'm really open to somebody explaining to me that that's not the case, but I'm 99.9% sure that it is the case. Simply because there can be no inequity between buyers and sellers, no imbalance. Aggressiveness, you bet. But for every one of these guys that bought, retail or otherwise, that bought a futures contract at any one of these levels, all the way up here, and that's how the market goes up, is aggressive buying, crossing the bid, crossing the spread, get me higher, I want in. And that means that up here, resting liquidity on the ask is selling to this guy, selling to this guy, selling to this guy, selling to this guy. And when these folks want to make money. What do? Ba-doom, 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 and they start hitting the stops, and away you go. They know that all these buyers are putting stops along these places. That's why the fallacy, it's not a fallacy about hunting stops. It's a reality. That's where the liquidity is. And that's how the futures market works. So once you get on the right side of whichever one it is and watch what's going on, then I believe that's how you can make money at it. 100% my opinion, and really open to somebody cluing me into something that's different or more accurate or confirming what I think. You know, I'm not a blind or stubborn or believe everybody in the band's out of step but me. You know, I'm more than happy to learn something new. Well, now what are we doing? Okay, it's 11 o'clock. The bond or the note auction is at 12. We haven't heard anything from the random risk squad for a while. That's kind of scary. I haven't monitored the stream either. I better do that. Didn't sound like it's supposed to be classical. It didn't sound very classical to me. Let me check. This is called something. Noted. Well, I am at least pleased with this. Pleased with this epidemic sound, so that I don't have any issues. So, yeah, 3 days running now. The tanker has turned. The context has changed. And here we go with the sawtooth thing again. Look at this. Look at this profile. Boop, 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 boop. Wow. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 little fractals all in a row. And did we? Didn't? Yeah, we did. Ping that, tap that high, or that naked volume point of control. Let's be sure. No, not according to IRT, we didn't. According to IRT, this naked volume point of control here is still valid. Here's today, right? And you see what happens when we do touch them, according to IRT. And I tend to think that's okay, the way to go. I'm going to try something here now. I'm going to try to deactivate the session prices for the IBOO. Where'd it go? The value area. I wonder if that'll screw me up. I better not do that. What I was gonna do, this is how the session prices, the RTX thing works. These are the exports. But you see here the V numbers. So the V numbers for this session prices are 101 through 120. These are variable numbers. This is how they're stored and then pushed via the export data to an inbound template, and then it automatically exports to the outbound template, which manifests itself through the magic of the internet to the levels right here. What I was going to do was, and you see this keeps jumping back and forth from where it's supposed to be down here to up here from the day before yesterday. I was going to change that by removing, just unticking it. But what'll happen there is it'll change these values. So in the template, all of the template names would get skewed, I think. And I don't want to do, well, I think. Big exclamation point behind, I think. So I definitely don't want to do that in the middle of a day when people are looking at those levels all around and everywhere. And then suddenly have everything go pear-shaped on them. I'd rather have this thing jump back and forth, which is now down where it belongs again. And I already put a heads up in the TLab about it. If it were the last value in the list, then it wouldn't be a problem, but it is not. So, if it were the last value, it would just drop off. But since it's not the last value, then my fear here is that all the other values would shift up, meaning that all the, many of these levels would be all screwy. I got to look at that. I can safely say I don't know the absolute answer to that question. But I definitely don't want to. My intention is to help fellow traders and, provide some data if I can. And I definitely don't want to put out something bogus. Now, as soon as, if I get nominated to be one of the pump and dump influencers and, get paid millions of dollars, then all bets are off. It would be so weird to me to get up in the morning and think, boy, I think I just figured out a way to screw a bunch of people out of their hard-earned hopes, dreams, and money. Because I'm a greedy douchebag. I mean, really, that is really, really strange for me. How thinking that way. And that's clearly the way they think, because, there's been a few busts and there's a whole trail of messages and stuff where they're discussing how to prevent it from looking illegal and how to do this and how to do that. So there's just straight up planning to screw people, like the scam deals, the pig butchering and all that stuff that goes on around. It's so weird. It's a strange strange time. Honesty and integrity is viewed as stupidity and a laughing matter to a lot of these folks. Yeah, Bernie Madoff. Also, there you go. That kind of thing too, Ponzi schemes, whatever. Sometimes I think those things start out with good intentions and end up bad, trying to keep the balls in the air, like they're, like Nick Leeson or, rogue trader guys that keep doubling down, or any moron that's trading Martindale, that keeps doubling down, figuring that they're gonna. All they need to do is get that one win, and then they're back to even, and everything's okay. That's different than sitting and planning and scheming how to scam people, old people, young people, broke people, desperate people out of money. That's a different story. And it doesn't know any boundary either. I don't think it can be, from the people that are putting messages on your cell phone, or the people at the top inside the beltway. It's a scam is a scam, I think. And here we are. Here I stand. Disappointed, but I have stuck to my plan, and 90% of it anyway. Just disappointed right over here. Right here at the IB continuation. Which one of these was the one to take? Well, this would have been too soon, in my opinion, and we didn't trade back through it. Let's see if I can make this. There we go. This one would have been, or this one would have been, or this one would have been the classical trigger for me, because we take the IB, come down. In my trade plan, we need to come through, retest the IB to the other side, whichever, in this case, lower side, and then go back up and not get continuation. So you could make a case for this one in here, over here, being the actual trigger. Of course, depending on where you were with that trade location, you could have been stopped out here, which is really disappointing, and then the damn thing takes off. You hear about that a lot. In hindsight, in the rear view mirror, of course, I knew without question that I needed to wait for here, right? Which is exactly BS and bus tickets. I didn't know that at all, otherwise I would have done it. But that's how the internet guru guys go about it. They look in the rearview mirror and they just knew without any question, and are clever enough to make up something pretty quick, that this was the buying they were looking for, and not this one or this one or this one or this one, but this one was the buying they were looking for, and then they're long and away they went. I'm not that good of a liar, I guess, or a bullshit or whatever. Okay, 11:15. I'm not in heaven. Would be if I'd have taken that trade. I'd have been, hey Panda, what's up, baby? I'd have been 5 past in the on to the Express. All right. Well, we've rounded the corner some about 30 minutes ago for RTH 1. We're in 2 now. I would imagine that we're going to get more higher ground. And I say that because, come on, stupid thing. Flat as a board on the top. There's no excess up here at all. Now there's very little down here, but if you squint real hard, you can see a little nubbin down there. I would suppose that we're going to trade up. Typically, the market doesn't end flat. That's called, if you're looking at it on a market profile terminology. What do we got over here? Well, no, that's not true. If you look at it on the market profile itself, we have some excess. Not on the volume profile, but on the market profile. The idea is a poor high or a weak high they talk about in market profile speak. When I look at these kind of volume profiles, just think about any distribution. What happens? Well, you go ripping up one way, and then you get less and less and less until pretty soon, well, okay, and then you go the other way. It's like any distribution. They don't generally just chop straight off. And that's why I'm saying I would expect more higher ground. And let's see what else is up here. Well, we have other things, I suppose. We've got the MCVPOC up here from the 29th. That's the number. Yeah. If they get up, and then of course this is the century figure, so they got to get over. They got to get back into the 4s up here, into the 64s. And that's another 30 handles. So it's a ways, but certainly doable. Absolutely. Here's $5 wide, $5 high. That doesn't work for me. That doesn't give me the sense of scale that I feel like I want. $2. I guess that's better than nothing. Wish I could set this so I don't have to do this thing every time. It jumps, I don't know, something. Okay, where are we now? Let's see. I'm not thinking about engaging anytime quick. So if you're in this market and sitting on a long, good for you. That's great. I've narrated ad nauseum my failure to engage here. Did follow my plan until that part. I got to really think long and hard about the discretionary final bit on my entries. I think that's just attributed to fear, actually. Which means, okay, what I need to do then? What am I afraid of? Well, losing X amount of dollars or X amount of points or ticks or whatever, however you want to view it. So, what are the alternatives? Widen out, which is increasing your risk and going the wrong way completely, in my opinion. I can't size down any lower than the risk than the package I'm currently trading. And so therefore, there's only two options is to just, cowboy up and take the risk on the 2 lot, which is 24 ticks. 24 ticks for a stop and 60 ticks for 2 targets. Or move down to micros, which is what I did earlier, and it was really painful because I guess I wasn't thinking about or trading enough volume or something, but it seemed like I was getting nowhere quick. I don't know, not saying that that's applicable to everybody, and I'm sure there's people that's all they trade and they make money and they're doing fine, and that's great. I am once again talking about myself. So there you go. I'm gonna step away here for a minute. And then there's that thing. Jesus Christ. I don't care. There's nothing I'm going to do or can do about that. And I wish I could just shut off the stupid notes, alert, or whatever it's called. Oops. Because short of redoing the way I do these levels, which I mentioned earlier, perhaps a way to redo them to OneDrive instead of Dropbox, I guess. I don't know. That's going to continue to happen, I guess. It didn't ever used to, but now it seems that it is. What are we doing now? Well, we got right up here. The VPOC migration just migrated up. That is a known structured trade by several. And without a doubt, my least successful. So here I stand. And I'm working on the IVs now, so that's not part of the game anyway. Part of my plan anyway, I shouldn't say game. I don't like to refer to trading as a game or gambling. I approach it as a business of statistics. And I believe that's the right way to go, the right way to think about it. Because if you start thinking about it as a gambling or something else, well, let me start over. I believe, and the reason I like this technique for journaling with the stream is because I very definitely believe that your subconscious mind believes what you tell it. And therefore, I try to never tell it things that I don't want to have manifest. You know? I don't want to be a gambler. I don't want to think of trading as a game. I think of trading as a statistical, consistently profitable statistical business. And the same way with, don't tell yourself you're stupid. Don't tell yourself you're a loser, because guess what? Yourself will believe that. And it's not just me, much the same as when I'm talking about statistics and trading. I didn't just come up with this. I'm not, the world's smartest psychologist or whatever else, mathematician. People infinitely more intelligent, educated, whatever than I have also come to these conclusions and identified these things. So I think therefore it's easy for me to buy into them and adopt them. And if you don't agree with that, that's cool too. Remember, this is my virtual private journal, my trading journal. I don't mean private, I mean my virtual trading journal. So the idea here is that I'm talking to myself. The only way I can understand or get any insight as to what I'm doing through the trading day and what I'm thinking through the trading day is this narration. Obviously, the screens are self-explanatory. Okay. We have now a situation which has been recognized by some of the better traders, Rod and company. Stupid thing keeps at it. That is really weird. Anyway, what we have here is, let me be sure I'm right. Okay, you notice how this is the brighter yellow POC, which is the full session, the RTH session, and you see clearly that we're 75.90, and that's the highest level, but not by much. Huh? We've only got to get another 500 contracts, and we're going to beat that level, and that will mean that the POC will migrate somewhere else. But the point for now is that's the RTH VPOC. This more muted yellow is the full session POC. So what happened here is that the RTH VPOC has migrated outside of the IB. In this case, the IB high, and by way more than 3 points, which is the kind of the cutoff that we've been using. And there are statistics around that about the percentage of time that we'll come back and revisit the IB, and then where we go on, and a lot of different statistics, which I'm not up to speed with, so I'm not going to quote them. But there are several sharp people, Rod and RM and Garrett and those guys, that are watching them and working on this, vetting them. Didn't matter in those folks. So that's a statistic that I should get up to speed about, but I'm not yet. Much more so than just the IB or just the VPOC migration trade, which is real simple. It says that, we're going to typically trade in the direction of the migration. And that's, how can you miss the yellow line, the yellow brick road moving here? You can't. So there's the setup. The real criteria that I cannot identify within a reasonable range for profitability is the context and the trigger. This time we traded down to this little liquidity here, this previous consolidation. We traded around down to here. I mean, there are a lot of different ways to look at it, right? And now we're trading back up. Now we're back up to the POC, and will we continue higher? I don't know. And I've tried that trade a lot in the beginning because I thought, oh, hell yeah, I can see that thing. And then I would get, I would go, okay, here we go. And here we've traded back through it, and now we're going up. Yeah, we did. And to be honest about it, that would have been the better entry because you at least got a scale out of it. But in the long run, after I captured a bunch of data on the trades, it was the worst of the bunch. And that's why I've fallen back to one at a time, vetting one setup at a time, and then I will trade that setup and work on vetting the next one until I have a, playbook. And I don't think that you need to have a playbook of a gazillion trades. I think if you have a playbook of, 4, probably good. I don't know. Just thinking out loud here. And I promise there is thinking involved, not just babbling. It's pretty quiet now, so it's scary. Pretty scary. 10-year bond auction is going to be in 3 minutes. Or note auction, I'm sorry. That might have some market moving capability. Then we got talking Feds. Not to be outdone by Mr. Microphone over here. So here we are. And also, let's point out another point, another important fact. It's noon. The 12 o'clock or the 12 to 1 hour is typically kind of sometimes reversals, sometimes volatile. There is a 12 to 1 statistic, which happens sometimes and could well happen this time, but and it goes like this. If the market is out of balance, and it's pretty much out of balance right here, right now, and we put in a new extreme high or low in the period of time between 12 and 1 Central Standard, obviously that's when the market's trading, then there's a high probability that we will exceed that extreme high or low at some point in the balance of the trading day. So it's a lot like it's nearly exactly the same as the initial balance statistic, but it's bracketed within the 12 to 1 area, and you have less time to wait because it's only you only have to worry about from 1 to 1500, 1300 to 1500. That's when the cash close is. So that is there's something for you to watch for and think about. I'm still spanking myself here for not eating my own dog food. And, I will silently experience the, that and, process it. And try to, and when I do my analysis and my homework, which I've talked a lot about already here, you have to do it with an open mind, and that's one of the reasons why you should do your homework and review your stream or your journal or whatever off market hours, because it's amazing how much your thinking changes when it's just unbiased or You know, when Hyde's not rocking and rolling around your mind, the monkey boy's not running around in there. You know, and the trade I'm speaking of here, which I have talked about a lot already, but here I go again because it's my journal. And that's the point of this, is the IB, you know, I'm working on the IB trades. That's what I'm vetting. And at this point, we were right here. We were rotational. A little bit of a lean to the upside. Then we came through it. Let's get this over here. We didn't, come on. Oh yeah, here's a good idea. We did not, there we go. We didn't take the IB high here, so in my world, the stat's not valid. Nor here. Aha. We took the statistic out now. Right here. Do you know what you're going to do? Do you know what to do? This is the hard right edge. That's why real trading is difficult, whatever you want to, however you want to say it, compared to the typical your internet guru rearview mirror stuff. Anybody, you know, could do that. Our daughters, you know, she's getting older, unfortunately, but she's not unfortunately. I shouldn't say that. She's now 17, soon to be 18, but doesn't trade, but she can narrate this stuff looking in the rearview mirror. Doesn't take anybody with a brain can see that. But here's the hard right edge. What are you going to do now? Taking out the statistic, you've traded up here. Is it going to continue on? Is that what you should do? Ooh, here's another one. Oh, let's see. There we go. There's buyers. They going to get up there? Uh-oh. Buyers aren't getting paid. Now what's going to happen? We're going to go down. Then we come back up here. Now now did I miss it? Should I jump in there quick? Uh-oh. Big uh-oh. If you got FOMO'd up here and you got in the trade thinking you were going to go IB continuation and you're that late entry, what is that? That's 52 and this is 49. That's a stop out. And now what's going to happen? Of course, the market's going to rip to the upside and take out these levels. And if by chance or by whatever reasoning you used to get in anywhere here or any place up here, you're a genius. That's what has to be analyzed and understood by me. And that's the purpose of doing this and analyzing the stream, recapturing, rethinking this stuff. And I'm not talking about rear view mirroring this stuff. I'm talking about analyzing it with a clear, unemotional mind. To get a grip on it, to get a grip on how you're going to deal with it. And of course, no two trades are ever the same. No two situations in the market are ever the same, really. How about this? How about this big V reversal down here? And then went up even higher. I talked about this at some point a little while ago, that at this point, vetting my trades, I don't change the brackets at all, because then the trade would not be could not be included in the statistical data set, because it wouldn't match. If you're trying to understand the statistics about the probability of times you're going to take T1 and the probability of times you're going to take T2, if you change T2 around, or T1, but if you change T2 around, then they're not part of the same data set. They're not part of the same probabilities. And that's a statistical fact. So I don't do them. when you're in actual trading after the vetting process, let's imagine that you're a genius and you got long hair. And at where are we here? We're 51. So 63 right here would be your T2. 12 handles. But look at what you lost, what you missed, right? Obviously, this is all hindsight, but what you want to do is maximize your winners, let your winners run, and keep your losers short. How would you do that? Well, the only option besides leaving your targets in is to move that T2 to a somewhat common or suspected or highly probable location. And the next one up the pike was previous RTH high. That was the next level that existed before all of this stuff moved up here. So you could then move T2 to that area, targeting this, a couple of ticks before there. But how do you manage that trade? Do you just let it run? This starts happening. Do you let it blow back in your face? All those things, you need to think about all those things. And that's stuff that needs to be weighed in advance, away from the live market, and then implemented or not in your trade plan. And I definitely don't think that anybody should alter their trade plan during the live trading session. There you have that. These are tough. Happened to me a lot. I want to try to maximize my profit, and what do I do here now? Do I bring my stop up to T1? Do I bring it to entry? Which is break even? Do I take it up to T1 so the minimum I get is 24 ticks or $300? If so, you're taken out right there, and the market goes on another 12, 15 handles. Or do you trail up tight and, get hammered here? Now, Tom has made comments other times. He doesn't show trades or call trades in the TLab. I think I forgot to mention that this morning. None of this stuff is scripted, so, I'm all over the board half the time. But he's mentioned, well, trade management's up to you. What are you going to do? Are you going to trail up to the last swing, right? Well, so there was a swing. Roop. There's a swing. There's a swing. If you did that, you would be stopped out up here, which is a hell of a lot better than down here. But you have missed out on your target and where we are so far. Now let's look at that more in depth and see if that's even remotely an idea. Let's say because you're in the trade, you're scrolled in to actually watch what's going on, and you're in from down here. And there's your scale, 3 points up, wherever that is. Yep, right there. And now you've decided that you want to target the previous RTH high, rather than just take it off at your typical, say my vetting process was over and I'm going to take it off. I'm going to get as much out of it as I can, not just take it off at 48 ticks, which is 12 points, obviously. So what would you do? You could, here's a swing. You scale to there, trail to there. Here's a swing. You trail up here. Here's a swing, or pull back, whatever you want to call it, and you trade there. I guess you could call this one This one, there you go. Here you go. What constitutes a pullback in your definition? Here? How about this? I don't think any of these got to be market noise, right? Here would be one. So you could trade from here to here. And then you'd be taken out right here. Which is, better than a sharp stick in the eye. That's for damn sure. But those are the nuances that you need to deal with after you've vetted the setup that you have to trade with. And this is, once again, this is my opinion. And what I'm going to do. What I am doing. All the while maintaining a cautious risk management. Never, ever move my stops away from entry. Hard, fast rule. And I'm trading with the risk neutral stop or target, number one target. That's 1-to-1, right? So I've also thought about this. So the minute I achieve risk neutral, I should bring my stop to entry. Then the minimum on that trade is 1-to-2. Isn't very good, is it? In the long run, with both of my targets, it's almost 3-to-1. This is just all the complexity that you need to deal with, and you need to think about. I believe you need to think about all of that away from the markets, and those are the things that put me. I go to sleep thinking about them and wake up thinking about them, and I believe that's what you have to do. I don't personally. My entire life is my work has been my life, and I enjoy it. Now it's trading. I stand here from 6 in the morning until 8 or 9 at night. I don't have chairs in here, so 2 stand-up desks. I think about trading when I go to sleep and listen to something on YouTube or review my stream. And I'm thinking about it over the weekend when I'm taking care of the, nuts and bolts and the back office stuff here and the maintenance and all those kind of things. And a lot of thought involved in I'm now essentially one trade away, 2 lot risk neutral trade away from passing the combine or the evaluation on 5 accounts, moving to the XFA. So I am continually thinking down the road, how am I going to be managing my trades? What are the parameters, the scaling, the this and that, and something else that has to come, has to be done. Marching towards profitability and then live trading and never looking back. And I've had my own accounts and my own broker, through a broker and stuff like that. This is specifically to do the 0 to hero, completely transparent, documented process. So there you are. And with that bold bit of news, I'm going to go mosey around here and see if I can trick my wife into taking a nap. Well, not much pop. No 12-to-1 trade, apparently. And I guess I'm just going to be disappointed in my performance on the IB trade. That's disappointing. But that's, the way it is. Well, here we are. Needless to say, I have no IB trade possibilities here. Still disappointed in the performance over at this area, which I've gone through already, so I'm not going to do that some more. Yeah, if you're just passing through, slap a thumbs up and subscribe. Drop something in the chat, say hello, whatever. That'd be great. All right. Wow, look at all that liquidity. That's typically not reflected here in my... Something's wrong. Why is this changed? Ah, I see what the deal is. You know, the colors have changed in my book map. Oh, okay. I was going, wait a minute, what the hell's the deal there? I see now what it is. I've obviously unintentionally, by some keystroke or the other, changed that color. Now it's back to the way I'm used to. And then we've got the world famous, oh, that's at 15:30. Okay, that's all right. Right now we've got a talking Fed in action. Two of them, actually. Cook and Collins. And we're going to come zooming into the power hour here pretty quick. I'm disappointed in my day today. Overall. A little background noise here. I'm trying to keep the thing muted as much as I can. But it's, we're rapidly approaching the power hour, which is referred to. Yeah, I've already gone over the IB trade that I did not take. Wussed out on that one, disappointedly, but hey, there's always tomorrow. And we did not have a 12-to-1 trade, nor has this VPOC migration amounted to a hill of beans, really. Oh, well, that's not correct, actually. Right here, as I pointed out, I think just before I signed off for a little bit there to go have some snacks. Right here, had you taken this VPOC migration, that was nearly 10 points. It wouldn't have been my risk reward, my 2 profit targets on my risk neutral setup, but still a good, depending on how you approach the markets and how you do your profit targets, etc. That it's not sneezing, it's nearly 10 points, right? So what are we talking about here? 67 to, assuming you got exactly on that, to 74. Basically six or seven handle. Now you got clobbered here and stopped out. Had another opportunity to look in the rearview mirror. This is all rearview mirror stuff. I did talk about this at the time, and I've talked about this ad nauseum, but the rest of it's rearview mirror stuff, so don't really bother with it much. Well, 2 minutes to the world famous power hour. I can't imagine much explosive behavior here. There's no news. The Feds, couple of Feds are speaking, and we already know where they're coming from. Mr. Microphone is going to be talking at 15:30, so that shouldn't have any effect. Yeah. Would have been had a good opportunity and didn't take it. As I was discussing yesterday, with regard to Renko charts, right? Tomorrow and going forward, as we near these IB opportunities, I'm going to really divide my focus between my book map, these areas right here, and the Renkos here. To try to further identify a trigger or a better, way of being somewhat more, confirmation of my trigger, I guess is the word I'm trying to say. But confirmation is not necessarily the thing you want to be striving for. As I said a little bit ago, there's information risk or there's confirmation risk. And if you take confirmation, if you choose confirmation, that gives you confirmation risk. In other words, we tested here, back and forth through the IB. We came up through it. Now, if you call this confirmation, as it turns out today, it would have been okay. It would have gone on to your targets. That's because you're risking this amount of 49 to 54. You're risking 5 handles there. Confirmation risk is you're putting the trade on down here, which is an asymmetric, imagining that it's an asymmetrical trade location, and you're risking the confirmation. That's about all I know how to say. I'm not saying I know the answer. I'm thinking out loud here, as usual. And what's the difference? Well, asymmetrical trade location is just that simple. It's where you have an asymmetrical relationship between between risk and reward. Typically, this is not where I consider an asymmetrical trade location. However, you need to remember that this is Mr. Rearview Mirror here. This is a rearview mirror analysis, so it's. Let me see if I can do this. I don't know how. I'm not very good at this. Okay, there you go. Typically for me, an asymmetrical trade location is out here. I usually think of them as mean reversion. I'm going to put a trade on right here to mean revert, and I'm going to put you can put your stop one tick above an asymmetrical relationship between risk and reward. In this case, I wouldn't do that because it's chances are extremely good we're going up. At that point, we didn't know, however. And my real failure in my process was not executing. It's so easy in the rear view mirror to know, okay, yeah, right here, right? Well, you don't know that. I didn't know that at the time. Let's say I got long here. I got stopped out here. Say I got long here. I got stopped out here. Let's say we, depending on what you look at, that's the joy of trading, and that's where you've got to be. That's why looking in the rearview mirror and listening to people that do that and talk about that and trade that way, unlike I do here, which is live and real time, and only live in real time, committing to not take any trades off the stream. That's why the stream goes from 8 in the morning until 1500 in the afternoon. So there you go. But that's just me. I want to ensure that I have a completely transparent, and 100% accountability on the entire process here of this exercise. And 30 seconds, 10 seconds, whatever, 15 seconds, I should say. I have my screen set for the browser, or for the monitor, not just the browser. So there's no question about the time to the second, further adding to the transparency and the accountability. Okay, we're in the power hour. I'll go around the horn one more time at when we turn the final curve down there at 1430. This is today. Tight chop up until 9 o'clock, which was the crude oil number, and some conversation here from the random risk department. And then here we go. Well, let's hope that there remains some adults in the room. We're looking for the node auction here. Lots of eyes on that. Yield is going up. What in the not sure what in the hell do we import from Switzerland besides Rolexes? I mean, really. I really don't know that. I would certainly think we would have more to worry about as a country than that. But hey, there you are. There you go. I don't get it. Absolutely don't get it. What does this mean right here? Well, it means that value is migrating higher. That's one way of putting it. There's also the other concept that there is no real value area in a trend day because the nature, actually, by the price movement of a trend day, the market is looking for value, trying to find a place of acceptance. Now, it looks like we just flew over to here, and then we did find some acceptance up here, you could say. This is just different theories. I think this is pretty funny. However, if you're familiar with market profile or not, the idea is a P-shaped profile is indicative or indicates short covering. So you see what happened. Then we did this. And then we did this. Okay, that kind of makes sense, doesn't it? Because you can bet that all the people that got there, remember that there's overnight trade in the middle of here. Everybody that got short up here, or any of these people that short here or here and got stops laying around up here, and the market starts to close this gap, they're covering. So that's short covering. A B-shaped profile is indicative of long liquidation. So too many retail people got excited we were going to close the gap and go higher, and they got long, and the market came back down here and said, oh, well, let's just see what you really think about that. Liquidated, took them out. What's happening today? Kind of P-ish looking, isn't it? And down here are how the days stacked up in daily bars here on the micro composite chart. And we have taken out the POC now, which we can, verify it over on Bookmap, in which I set the text to black. That's what I do. Here is the previous RTH naked volume point of control. The naked volume point of control. We took that out right here. And here is the volume point of control for today. Just above us is the previous micro composite volume point of control. And then all-time highs and all that stuff. I don't know whether you noticed or not, but because I didn't have my mic on, my wife is running the vacuum up and down the hall right outside my office. So anyway, my workflow here is that when these numbers or levels or gaps or whatever, when they're revisited and they're no longer active, I change the text to black. Okay, so what else is going on here? Let me think. Well, I never noticed it did that. That's pretty interesting. Okay, watch this. Notice how it does do it. Yeah, I had never noticed that the VWAPs and the mid and stuff go off and then are recalculated when I scrolled in or out with a price. I was just noticing that when I did that down here that they blinked. But I guess that's a normal behavior. Been using this thing for years and I never noticed that before. That figures. Normally I'm focused up here. I guess. Well, Billy boy, I'm pretty disappointed in myself here, Mr. Boomer. I am pleased that everything worked out just as I actually expected that it would, to do with the accounts, TopStep accounts. Just all that was required was they have, so many people and they're working through everything. And I finally got somebody on the phone and they fixed it lickety split. And the guy said, "Oh yeah, there's 3 of them that aren't, or 4 of them that aren't assigned. There you go. You'll have to reboot and restart, and not my computer, but the Rhythmic, and the Bookmap, of course, and IRT, which I did, and bam, there they are, no problem. So that was as I expected, and not a drama. And I was pretty excited about coming into today with the full clip here again. And I suppose that lent itself to my additional apprehension. I'm real conscious of, or try to be real conscious of am I on tilt for any reason? Oh boy, excuse me, but my left eye the air quality here is pretty lousy. My eyes are killing me. Anyway, I try to be real conscious of, am I on tilt? I want to be really on guard against FOMO. I didn't get to trade those last 2 days, and they were really. But I, of course, did stream and narrate lovely IB continuation trades both days. No heat, clear as a bell, signal and trigger. So I was real cautious or on guard about wanting to not revenge trade, but make up for it or something like that. Something like that. I need to be more articulate on this. I'm sorry. And so I guess that probably fed into my apprehension here of taking this trade, which was the only opportunity, IB opportunity that was presented today. Now you could, in theory, you could say you had a couple of them within this area, but I'm talking about this area. And to beat a dead horse, but I am betting the IB trades. So that's what I'm doing. I'm not doing mean reversion. I'm not doing VPOC migration. I'm doing the IB trades. I'm betting those trades, and I'm, nearly there. So, and I don't have any problem with that. I am, as I said early on in the stream, I'm happy to know where I'm going. I know that I can analyze the market and keep a clear head and, narrate what's going on with market price action up until 9:30. And at that point, I continue to do so, but I am then on guard or on point for a trade opportunity. And when we're flopping around up here somewhere, nothing I'm going to do. So that, hey Panda, are you singing to everybody? Did you finally get your little fat self out of bed? My cat, affectionately referred to one of our cats, Panda's decided to come say howdy do. I'm sure she's going to point out to me that her snack bowl is low on inventory. And yeah, so that's where I'm at. And I would recommend anybody that's having a problem over trading or, not getting consistently profitable to approach the market like that. Use a risk neutral package or trade philosophy like I do. And I've explained a few times. Let me get Panda taken care of here, and then I'll run through all of that. Do the typical pre-close run through. Stand by. Oh, there she goes. She's gonna follow mom. She's giving up on me. So what is that? Well, the risk neutral trade is, first and foremost, I use the multi-brackets. I use a risk neutral trade management system designed and, it's no proprietary anything, and it's just common sense, but here's what it is. One of the key important criteria is you need to have an even number of contracts. Therefore, this is the smallest package, risk neutral package you can use, 2. And why is that? Well, the stop for the entire package is at one location. In this case, 12 ticks. You can determine the number of ticks by the volatility. First thing you should start with is the risk parameters of your account. And then the volatility of the markets, et cetera, your risk appetite, how well you do, those kind of things. Once you've established the number of contracts and the stop size, then the T1 or the first take profit target, which is the risk neutral target, is for the same amount of ticks as is the stop, but positive, obviously. If this is negative 12 ticks and this is positive 12 ticks, or the other way around if you're short. And for half of the package. What this does is, the minute you achieve this profit target, this risk neutral scale, the worst you can possibly do in the trade is scratch. Absolutely the worst thing. Unless you move your stop away from entry, and then you've got a lot bigger problems. But the minute you achieve the first T1 risk neutral scale, the worst that can happen is a scratch. Takes all the pressure off. The market suddenly becomes much clearer. You're not, adrenaline's gone. It's really phenomenal. And of course, there's a 4 lot. Okay, Panda. Come on. Sorry about that. Back to the drawing board here. So if it's a 4 lot package, all of 4 contracts, same stop size, half the package, same number of ticks as the stop. Then you can have multiple runners. If it's high volatility, like we just experienced with, April, whatever that day was called, the day that shall live on in infamy, the day who shall not be named. All 4 contracts, same stop, half the package, same ticks as the stop, runners. That simple. You cannot believe how that will aid your psychology, and don't touch them. I mean, if you don't ever move your stop away from your entry, and for the first little while, don't try to over-manage it. Don't try to, trail up or do any of that kind of stuff. I heartily recommend it. Now, I am one trade away here, essentially. One, 2 lot risk neutral trade away from all 5 of these combined accounts passing the combine to XFA by just plugging along like this. Maybe 1 trade a day, maybe 1 trade every couple of days. I think, I'll have to look back on my static journal at how many trades I actually took in July, but that's the way to do it. And the fact that and specifically applicable to and vetting 1 trade setup. And that's what I do. Once this is vetted, then I will have this trade in my playbook, and I'll look for another one, but I will have this one to trade in addition to vetting the second. You understand that? And the reason I chose the IB trade, there is an absolute, definite, specific time that it occurs. Absolutely not before 9:30. First 1 hour, because that's the definition of the IB. Remember, it's the high and low of the first 1 hour of the RTH session. The statistic is not valid or active until that time. After that time, then there you go. Here we are at 9:30. Actually, 9:55. We did not take the statistic here. It's not 9:30. We did take the statistic here, and then this is where you look on, and I dropped the ball, I guess, wussed out on actually taking the continuation trade. Another reason I chose the IB, and if you've heard me say this earlier today or, days gone by, I'm sorry, but I'm reinforcing things for myself and for new listeners. The IB, or the initial balance trade, has 2 trade types based on the context of the day. If we are in a rotational day, one would expect the IB failure, which is essentially a mean reversion trade. Now, in my case, if we're in a situation for an IB failure, I need to think about, is there enough meat on the bone? Is there enough room for my trade parameters, my profit targets, within the current, at that time of day, in the current range? But it gives me a trade to look at for the balanced rotational day, which by the way, there's a much higher percentage of trading days which are balanced or rotational than are trend days or directional. And that's a fact, Jack. The second IB trade, which is what I was talking about today in the last couple of days, is the IB continuation trade. So that gives you a trade for the IB failure, trade for the rotational day, and the IB continuation trade, which gives you a trade for a directional day. So it's, I think that's a good one to start with, and there's no question about it. You know, there's no ambiguity about when was it available, when wasn't it available, those kind of things. So I think that's important. And then I only use a bracket. Hi, Alex. Hey, you're welcome. Thanks a lot. I appreciate you joining in there. Smack the thumbs up. That'd be great. Where are you? I don't know. Every day I start streaming every day at 8 in the morning, Central Standard Time, US, and do the little, setup things, and then look at the reports and numbers coming up for the day, plan for the day. Then the pre-market and some specifics about, how to set up the risk neutral bracket and those kinds of things. And then we're ready for the open, and we go all day until 1500, which is the cash close. But yeah, that's great. Welcome. Thanks for dropping something in the chat there. I get to wondering if it's just the crickets are laughing at me out there. And what you did or didn't hear is the point of this is my virtual journal. So my screens, I use Bookmap and I use IRT. I go into depth on both of them. And by the fact of the stream here, it captures my video, obviously. And my voiceover or this narration gives insight as to what I'm thinking. So it's essentially and exactly my virtual journal. And I have a very firm commitment that no trades will ever be taken in this accounts off the stream. And that's exactly why the stream goes for 7 hours every day, plus 7 hours. I don't want a situation. I would never be one of those guys who, is underwater by $1,500 or something like that, and then the next day is magically up. And oh yeah, well I traded that in the afternoon. I made it all back. Every time I heard one of those, I just go, oh Jesus. And that's not the point, right? The point, who would I be cheating there? Me? How dumb is that? So that's where I'm at. But yeah, welcome here, and your feedback is greatly appreciated. And if I say something that sounds crap, just like I was talking earlier about, the numbers and things here to do with reporting and the Fed stuff. If you know something more differently than I do, yes, every day, 5 days a week, Monday through Friday at 8 o'clock in the morning, Central Standard Time, all day. Same basic format. And that's it. Got a few people from other places here. Antonio joins up from Portugal, and Richard's in the UK. So yeah, it's every day, 7+ hours a day, and there we go. Completely transparent and absolutely accountable. I also, even taking that further, you notice that instead of just the application, I have my entire monitor shared here on both sides. And there's the date and the time to the second. So there's no funny business. Now, depending on, well, it doesn't really matter, I guess, depending on where you are, but there is a YouTube has a built-in, I don't know, few second delay, 10 or 15 second delay, So when you hear what I'm doing or see what I'm streaming, if you look down here at my clock, you'll notice the difference between my clock in seconds and yours, wherever you are, and that'll let you know what the delay is to where you are. So, but I'm real committed to transparency and full accountability. And what have I got? I'm doing this. This is recording the process from zero to hero, from the beginning to the evals, XFA, live funded, etc. And that's the point. And I'm not sure if you're familiar with Bookmap, but any trade, all of this is recorded both on the stream and by Bookmap, and any trade, including entry, targets, stops, moving any of those things, position, average price, volume, P&L and ticks is all recorded and right there for everybody to see. Oh, France, bonjour, ça va? Well, there you go. And my French completely sucks, so... Pardonnez-moi, excusez-moi, j'ai parlé un petit peu français. Once for a while, I lived in St. Bart's in the Caribbean. So yeah, welcome. And I drink some of that red wine every night. So you'll be in the similar time zone with, and I'm sure probably language with. Ouais, merci bien. I'm sure that you'll. Antonio, as I said, is in Portugal, and Richard is in the UK, just a little bit west of London, I think he said. So, great, yeah. We lived in Kuala Lumpur, Malaysia for 11 years before moving over here in late 21. And before that, I kind of lived along the equator, sub-Saharan Africa for about 10 years. And then the Caribbean for a bunch of years before that. That's when I was in St. Bart's. In Angola, I was in sub-Saharan Africa. I was primarily in Angola, so that's, as you know, probably know, is Portuguese. And I don't speak anything worth a damn. I'm one of those people that is a lingual idiot. I'm so in awe of you folks who pick up different languages and are good at it. And I really admire that, and that's a skill I don't have. I don't have an adaptation, I'm not adapted to that. So, there you are. Welcome, absolutely every day. Central Standard Time, USA, which is 1 hour ahead of New York. It's the same as Chicago time, if that's easier for you to figure out on your clocks. And it's only, I only work on the futures, typically the ES and the NASDAQ, but primary focus is on the primarily on the ES. There you go. Now we're in the power hour, which is coming up to the, we've turned the corner now and we're heading for the top of the hour, which is 1500 Central Standard Time. And that's typically when I close the stream. That last little bit of time there is very light volume and I'm not going to be trading it, so it doesn't make much sense to me. And let's take a run around the horn here. Just for Alex's benefit here. This is investor RT charting. These are Renko charts. This is the ES Mini. 24 or 12 tick Renko. This is a 48 tick NQ Mini, NASDAQ Mini, because it's trades so much volume I have to get the ticks way up. And this is a micro composite chart, which is real simple. It is just a RTH, which is the daily session. And each candle is a day. Wherever price overlaps, I draw a volume profile around them. And by doing that, it automatically generates a micro composite volume point of control, high and low volume nodes, which are these red and green lines. The high and low volume nodes push automatically to bookmap, as do the session prices here. And this is a ES market profile chart, or TPO chart you might recognize. And quotes page up here. Now the session prices and the high and low volume nodes, as I said, push to bookmap here. And this is the micro composite column where I automatically enter, I manually enter these various prices, naked points of control, etc. And that micro composite POC. This is the volume nodes, high volume node and low volume node. Let's see if we can see some of the others. There's a low volume node, a high volume node, indicate, an example of some of the other. Here's the micro composite VPOC. And I put the date this way. This micro composite VPOC was set on the 29th of July, 2025. I lived out of the country of America long enough that I do dates, I think the way you probably are used to, which is day, month, and year. So that's easy for you. This is the full session volume profile, which started plotting at 1700 last night. My charts stay alive, especially IRT, are on and active and pushing levels from 1700 on Sunday evening through 1600 on Friday night, 24/7. This is the RTH volume profile, which resets every morning at 8:30. That's been giving me some trouble. And this notes column is fairly important for me. Well, I don't know about professional trader, but I've been doing this for a while. I started trading in 1999, but not full time and not successful, not always successfully. And this is a real focus to achieve consistent profitability, right? I talk about it in the pre-market and through the day. Trading as a business, a sustainable, consistently profitable business, not a video game or gambling or whatever else. So that's how I approach it. Now this column I update every morning. This is the open type for the day, which is higher in range. And then these are the statistics, or the probability that each one of these session prices, which are pushed from IRT, are revisited by price at some point within the upcoming RTH session, and these statistics are based on the opening type. This is all real simple. This may sound a little confusing right this minute, but very, very interesting, very, very simple. Everything I do is simple, straightforward, based on math and statistics. So many internet people want to make it seem like you got to wear, Harry Potter or a wand or something like that. That's absolutely BS, as far as I'm concerned. Okay, good for you. Well, these session prices here, I are generated from my stuff, and I share a link for these, which are updated live all day. And a number of people in the TLab, Traders Lab, and also Static use them. And I'll be happy we can make a plan to, we can work out a plan to get you the link, and then you just you put this link in your in this cloud note column, and these levels will be automatically there instantly. Now, the lines associated with these levels is an app or an indicator that you need to buy from Bookmap. You don't have to do that, but I kind of like them because I'm old and I like to see the lines, but you certainly don't have to do that. But the levels are pretty handy. And then these are the my version of how I have the heat map set up. For example, this is the current, and I didn't flag it. Oops, bad for me. Busy talking to you. This is the RTH session, which is the day session from 8:30 in the morning Central Standard Time through 1600 Central Standard Time. And then the ETH session, which is the electronic or the overnight, starts at 1700 in the evening and goes through until 0830 in the morning. So those are the two sessions. And the rest of these are straightforward. You know, nothing is hard to do or complicated. The POC is nothing more than the price at which the most contracts have traded so far in the session. That's all. Right there. 13,723 contracts have traded so far in the RTH session today. Here we have 13,421. The minute we get 300 more contracts down here, or just one more contract than up here, you know, this yellow line's going to move there. That's all there is to it. It's not complicated. The IB, high and low, is also very straightforward. This is an old acronym from the market profile days called the initial balance. What these two really represent, actually, truthfully, the high and the low of the first 1 hour of the RTH trading session. That's all there's to it. And the rest of them are just the, you know, just the initials, the overnight, the ETH high, IB high, developing value area low, value area high, you know, real simple. So you'll have no problem. Okay, I'm not familiar with how they do the weekly pivots and those kind of things. I do have, as you've probably noticed, the icebergs and stops on my heat map. So great, welcome to the stream, and certainly pitch in, and hopefully you get something out of it. And if you don't, that's up to you too, you know. But it's great to have someone else join in here. One of the things I do, I've started doing recently, is I put this vertical line at the session start, and then I try to keep the entire session visible in my heat map all day. That gives me a real good idea about context, keeps context in the front of my mind, which is the most important thing in trading. Trade with context. Context today has been up. Short today against this context is you're going against the prevailing army, right? You're swimming up the river. That's not good. And then when it comes time, and I'm currently vetting the IB trades, of which there are two. The IB failure, which is a mean reversion. That's from the outside, you know, that would be this way, or IB continuation. And they only are available after 9:30 when the IB, or the initial balance statistic, has been established. So I keep my screen looking like this through the morning. And then when we get into the area when the IB would be, I didn't take any trade today, that's why there's nothing here on the screen. And then I zoom in when I want to engage with the market. So you know how to set up, do you use multi-brackets by any chance in your trading? This is real handy. It's the multi-bracket, and it's free, I'm 90% sure, and you can also do multi-bracket sim, so you can use this in replay even. Pretty cool. The way this trade deal works is this is the smallest risk neutral package or risk neutral setup you can use, because it requires an even number of contracts. So 2 contracts, and both or the entire package have the same stop in ticks. Then half of the package has the same number of ticks but positive. So if we're going short, or let's go long, maybe you're more familiar with that. If we go long, this would be minus 12 ticks, and this would be plus 12 ticks. And the contract size is for half of the package. Now, the beautiful part about the risk neutral system or idea is that the minute you achieve this profit target or this risk neutral scale, the worst that you can possibly do on the trade is scratch. Because this scale pays for the trade. Now you have one contract that's paid for, and in my case, I have a 48 tick runner for that second profit target. If you use a 4 lot, same idea. 4 contracts. In my case, I've chosen 12 ticks because of homework that I've done and the market volatility and things. You could do whatever works with you. Half of the package, same number of ticks as the stop, only the opposite direction, and then 2 runners. It's real simple, but it really makes a hell of a difference psychologically to me when I have that set that way. So that kind of brings us up to speed, and we've just now had the 1450 is the market on close orders. And that's what we're getting right here. Not very much of a reaction today. The market on close orders are not up here yet. Oh, here's something that's important that it would be of use to you, Alex. Financialjuice.com, and it's free. And the one I always use for reporting and stuff first thing in the morning is investing.com, also free. So what's going to happen tomorrow? What are we looking for reports and numbers tomorrow? Well, we've got continuing jobless claims. Initial jobless claims is 3-star. That's important, and that's at 7:30 Central Standard Time. Then we've got a couple of FOMC speakers, and we've got the 30-year bond auction at 12 noon, which is also very important. We are now in earnings session, cycle, season, whatever you want to call it. These are the earnings for today. And here would be the earnings release for tomorrow. The little half moon or quarter moon means that they will be released after the market closes or after 1500 today. And the little star thing or sun thing means they're before the market opens. This is also free, investing.com, and this one is Financial Juice. This is a little more, it's got a little more things like these kind of a lot of stuff with Trump now, putting out this and a lot of talking and things. These are the market on close orders. There's 1,744,000,000 contracts sell side for the S&P 500. 1,137,000,000 sell side NASDAQ 100. 650 million sell side for the Dow 30, and 326 million sell side for the Mag 7. Now at 1530, I call the administration people now random. Anything like this is what I term random risk, because we have no idea what they might say or what impact it may have on the market, and a lot of times we don't even know that it's been scheduled. So yeah, it's a pretty strange time over here, that's for sure. No, I do not have the paid version for either one. I don't have the paid version for Financial Juice or investing.com. And right here, you see this? This feed is delayed. You can pay them and get it not delayed, I guess, but no. I use, for the sake of the stream, and to be honest with you, I don't think I need to have anything more timely than what these are. And for people that might be joining or viewing, you know, I don't know how much this is, frankly, but like Financial Times, for example, it's $50 US a month just to be able to access this. You can see the headlines, no problem. But if you want to look at any one of the articles or something, then you have to sign up. So I don't think that's particularly great. So I make sure that that the reporting stuff I use for numbers and things are free. And that's, I think that's the best way to go. Okay. Well, there we are. Now we're going to close her down here in about 6 minutes. Nothing really magnificent has happened. I did miss my IB continuation trade right here, which is right over. Come on. Was right here, and that was real disappointing. So there we are. Yeah, that's great. Yeah, my pleasure. In the morning, first thing, I do the pre-market and all of those things and go through how I set up my, how to, because maybe people do or don't know about the trade control panel and why and how I set it the way I do, how I set up the risk neutral package and those kind of things every morning. I try to follow the same kind of flow for new people and for myself to reinforce the procedure, the process, and then ready for 8:30 when we have the open, and away we go. And here we are, we're jamming in here for 1500. We got 4 minutes. You see the liquidity starting to build. I prefer this kind of a non-busy heat map. It's easier for me to understand. I don't have all the balls and the multiple colors. If you're interested in this black deal, heat map settings, I'm sure you know that. Include legacy color map, and that gives you this selection, which is opposed to this selection. You see how it changes to that kind of greeny thing and much more liquidity in there, even though I have it set really low. So I like it on that one. That gives me black. That's absolutely a personal preference. Absolutely. And this, of course, I am sure you know, but if in case not, is the dome or the depth of market. I don't know what. I'm curious. Now you got me curious here, Alex. Well, we're going to shut her down in 2 minutes. I don't think anything. Well, we might get a closing swing trade. Let's see what happens. I would not be taking it because I wouldn't consider that. It's not part of what I'm vetting initial balance trades, not any other setup. So let's see what happens. Let's see what happens if we get the closing swing trade. I don't know. Who knows? Then I was gonna, out of curiosity, I was gonna see what the financial juice thing costs. Wow. If you're looking, yeah, $69 for 3 months, as opposed to, and they're saying it's a big sale. It's usually $207 or something. Well, I'm not going to be going there anytime soon. I don't need to. You can get, you can end up with a huge investment in these kind of things I believe so. Maybe you wouldn't. I don't think I would get any more benefit out of this than what I get out of that right there. Here's our liquidity jammed in here on both sides as we approach the close in 15 seconds. Now those market on close orders are going to start feeding through, and here we go. I can't get that lined up, so. Not much in the way of a closing swing trade today. Well, how did we end up today? Most of the day we were running over 100% volume, relative volume to average. Now we finished it up right about even. This is harmonic rotations, daily range. This is open interest in the ES and the SPX. Just a couple extra things. I also, by the way, well, it wouldn't help much because I don't spend a lot of time on these particular charts, but I do push the levels, and I also plot the micro ES and NQ and the micro ES, micro composite, and push the levels to some people that are trading the micro accounts as opposed to just the minis. But there you go. All right, so there is a walloping day. Really nice of you to drop in, Alex. It's fantastic. I wish I could remember or speak any more French, but I'd rather not hurt your ears trying. So I will be back on at 0800 tomorrow morning. If you'd like to have a link to these CloudNode thing, and that's real simple to do. I don't know what you do or do not know about Bookmap, but if these are CloudNode columns, I've just changed the title, and all you do is go wherever it went, configure column, right, and you change the title there. That's all there is to it. That's how I change these title every day, and these ones I just put in. And all you do with a cloud note column is it's notes rather than custom notes where you type them yourself, which is what this column is. This is notes, cloud notes. Yes, that's what we're going to do. And then you put a link, the link that I share. This is not shared. This won't go anywhere to your computer. This is internal with my machines. You just paste that in there and click save. And bam, there you go. They just immediately show up right there. That's all there's to it. So that's pretty handy. So I will be back on at 0800 in the morning. I also, yep, take care. Abiento, bonne nuit. I'm going to leave also. Oh, I should say bonsoir. Bonsoir. All right, I'm going to sign her off here, ladies and gentlemen. Remember to get some exercise, get your eyes away from the screens. It's real important to be healthy and well rested. Makes a tremendous difference in your ability to trade, sharp thinking, all those kinds of things. So all the best, and I'll be back at 0800 in the morning. By the way, I update the time chapters at the close of every day stream, so you don't have to, I mean, who's going to stand and listen to 7 hours, right? But there's a time chap, you can just jump around in there. It's pretty easy. All right.